All right, just going to take a minute and get everything set up, and we'll get rolling with our regular daily technical analysis. Looks like we have a solid connection. All right, great. Everything is looking good. All right, perfect. Okay, so welcome back to the channel, Crypto Trend Trader. Today we're going to be taking a look at some of our regular assets. We're going to get started here with DXY, and then we're going to move into TNX, 10-year Treasury, followed by our traditional markets. Today we'll be looking at the S&P, Dow Jones, Nasdaq, Tesla. We'll take a look at MicroStrategy, move on to gold, silver, uranium. We're going to look at First Majestic Mining, Tilray, and then we're going to move on to cryptocurrencies from there. So let's take a look here. All right, let's start here with our US dollar index, DXY. So, all right, we have our DXY chart. I'm on the daily currently right now. We're going to switch back and forth between our resistance support like drawing tools and moving averages. So currently what we're looking at is we basically have this channel that we've been operating inside of, descending channel. We had spoke about specifically preparing to break out of this channel and retest some of the previous resistance points, previous support as resistance. So the key resistance here, horizontal wise, is right around the area we're at right now, which obviously is why we've sort of like topped out right there on the DXY. But essentially we're expecting to get the measure move, which this measure move here is the distance from the bottom of the channel to the top of the channel. So typically when you break out of a pattern like this, you will retest the break as support. And if you find support on that line you broke out from, you will then get the measured move, which is typically the distance of the channel at minimum. So that's what we're expecting. We're expecting DXY to get up here close to like 95 in the long term, but we've already run into our key resistance. This was previously support on multiple occasions, and then we came back up and retested it. Now it's going to hold us down as resistance. What we would expect is at least a slight sell-off here, and then same way that we touched it here and then kept touching it multiple times and then broke through it, we would expect the same thing to happen inversely. So now let's turn on our moving averages. So here with our moving averages, once again, before the breakout took place, what we were expecting to happen was essentially come up, test the 89, come back down, put in a higher low, which we did. So we put in a low here. We put in then a high. We then put in a higher low. It was higher than the previous low. And then we came up again, broke through that high, which is exactly what we're expecting to happen. After we break through the high and break through the 89, we're expecting to come back down, potentially retest it as support, and then get the continuation up to the 200. Continuation to the 200, the light colored one here is our exponential 200 moving average. The darker blue right here is our simple 200 moving average. So we would in fact expect to get the push back up to that, right around like that 92.8, 93 range roughly, which point in time, once again, we would be testing like, key resistance areas in here. This is what we call a cluster right here. This whole area of consolidation is going to basically be resistance for us to break through. So until we get up to like 95, which may not happen anytime in the near future, until we get up to 95, we're not in the clear to break to our next cluster. So at this point in time, we now have a bunch of overhead resistance that we would have to get through. So we are in an uptrend on the daily. We did get the cross. We did get the hard buy signal. We're now in the bullish control zone. So overall, irregardless of fundamentals, you would think printing, $1.9 trillion would scare people away. But it's a global thing. So the strength of the dollar is strong. Well, stronger than it was back here. in relation to the basket of currencies that this measures, primarily being the euro. So now switching over to the 10-year treasury, same exact thing. We're operating inside of a channel for an extended period of time. Let's zoom way out here. We're obviously in an overall downtrend. When we got the capitulation move back here, we basically sold off from 3.24%. And this is the yields on the treasury note, the 10-year treasury note. So we're taking a Fibonacci swing from the top to the bottom. The bottom obviously being that wick down here. We then put in a higher low after that. So that was the beginning of essentially like a potential uptrend based on our indicator oscillators, especially on longer time frames. It obviously appeared like we were starting to move to the upside. Once we put in like a low down here and then a higher low there, we're potentially looking to take out the previous highs, which we then started to operate inside this channel, white being support, red being resistance, and we were operating at like key levels of that Fibonacci range that we've identified here in yellow. So the key range for the Fibonacci was from that top to the bottom down here. We then came up to the 236. Almost immediately after we bottomed out, we made it all the way back up to like the 0.5 as like a reaction rally. And then we just started slowing, like showing weakness and slowly just continuing to sell off. We took it all the way back down to that 0.5 level roughly. And then that's where we put in our second low, at which point in time we started operating inside that channel and basically just bouncing around to the upside. We got multiple touches, 1, 2, 3, 4, 5, 6, 7 touches on the bottom, and 1, 2, 3, 4, 5 right here. And that's when we started talking about it looked like we were going to be breaking out to the upside, which in fact we did. So we broke out from this, and immediately once again, we're looking to get the measured move. The measured move, once again, is the width of the channel itself, and that's a conservative way of measuring the move. Once you break out of a pattern like this, you would expect continuation in that direction. So we almost immediately got that measured move directly to the top there, and then after that sold off back down, just like we said, found support on the previous break of resistance, and then we've gotten continuation to the upside. On that wick, we took out the previous high, and then we showed a little bit of weakness selling off right there. I do not think this is done. We did get the hard sell and left the bullish control zone, but I think it's just a matter of time before we continue on up in there. But we have to be careful and pay attention to what this is telling us and, what we're hearing from the Fed and what's happening with the government as well, because all these things are working together or against each other in various ways. Some are like the canary in the coal mine. Others are, lagging indicators. So it's important that we pay attention to all these things and then pay attention to the relationship between them and what makes it important. So that's exactly what we're doing right now, paying attention to these yields and where they go to. Most importantly, though, we did break through on that Fibonacci level, the 618, came down and found support back on top of it. So now our next Fibonacci target is going to be the 786, which that yield is 2.09%. Obviously, like we've spoken about previously, the 1.5 level is very important because that's going to cause people to de-risk from the stock market, as essentially the S&P dividend is roughly 1.5%, what the S&P pays you a dividend annually. So if you can, the stock market is essentially betting on public companies, as where, buying a 10-year treasury yield is betting on the stability of the government in that same period of time, essentially. So if you're going to take the safer bet with the same yield is going to be the treasury, especially in uncertain times. As where, when you're speculating for higher yields, or when the treasury's yield is extremely low, you will run to, riskier assets because you need to basically make sure that your buying power is not diminished, through inflation. So this is a key resistance area right here. Just like we were talking about with the dollar, there's a lot of resistance right here in this consolidation area, at which point in time, if we chop around in this area, it would make perfect sense. But we're looking for this to hold right here and then potentially get that test up to like the 2.0 level, at which point in time I think we will see Powell and the Fed start to legitimately get worried. So that's definitely a level and, indicator that we're paying attention to. So now let's go into our traditional markets. I do want to remind you before we get started with the traditional markets, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I will just be taking a look at the technical analysis and not giving any specific like buy or sell recommendations. Please don't take it as that. If we just take a look here real quick though, you know, talk about how to identify a trend, an uptrend and a downtrend. And this is very important because once price action is below the 200 moving averages, the two blue moving averages, and then the slope rolls over to the downside, that is a downtrend. So we have been in a confirmed downtrend on 10-year treasuries since December of 2018. So basically all of 2019, all of 2020, and then in 2021, we were able to break back above the 200 moving averages here. The exponential being the bright blue one, simple on the bottom right here. Once we broke above them, you'll notice that essentially we started consolidating on top of them, and now we have flipped the slope back to the upside. So now we have a positive slope on this 10-year treasury. It is in a confirmed long-term daily uptrend. So welcome, brother. Appreciate you putting a little message in chat just so that I know that you can hear me okay and everything. It's coming through loud and clear. Picture looking good and clear. All right, so we're going to switch over now to the S&P. And, you know, we looked at this basically. Yeah, I'll definitely talk about the rig. Yeah, for sure. Let's take a longer look at the S&P real quick here. And we can get a better idea as to what's going on. Once again, I'm going to shut off the moving averages. And let's just take a look at what's going on here. So please excuse all the Fibonacci levels. But, you know, basically now we're on the weekly. So this weekly chart is going back to 2009 right now. So this is March of 2009. You know, obviously was the capitulation event previously, you know, from our all-time high back here in 2007. So since that time, you know, with the exception of a couple areas where we broke out the bottom or broke out the top, broke out the bottom, and then this capitulation back in March of 2020, you know, we've basically been operating inside of this channel here with the blue at the bottom and the red at the top. So this is, you know, from 2009, you know, we're looking at an over 10-year trend, basically just oscillating inside of this range. So a break of this range in either direction, you know, will look extremely bad. So that's exactly what happened when we capitulated back in March. You know, when everything was happening, we started dumping down here. We came outside of this channel, but we got that V bottom and corrected back inside. And you'll notice it acted as resistance when we got back to it, and then acted as support multiple times. And then we got continuation to the previous high right here, and then broke through all-time high, came back down, found support at a higher level, and then we came all the way back up exactly to the top of the channel. So again, this is an over 10-year channel we've been operating inside of, and we're still respecting it, even though we did get a break, you know, in and out of that channel. So once we got back to the top now, once again, like clockwork, we started showing weakness exactly at the top and started selling off. And now what we're paying attention to here, and what is very important here, you know, this is obviously a new all-time high, but we came up exactly to it and started selling off. And we want to pay attention to, are we taking out like these previous candles? So this first initial sell-off right here was obviously bearish. And then we came back up and attempted to get back higher. And now we're putting in a lower high. So what we need to pay attention to is, I'm going to switch back over to the daily now. Can we get back up here and take out this previous high? Or are we just going to put in a series of lower highs, and then, you know, essentially another lower high? Because you'll see what happens is we sell off and then we get like this attempted bounce, and then we just bearishly sell off. And then we get another attempted bounce, and then we just bearishly sell off. And then we get another attempted bounce. And every time, everyone is buying these bounces up, and it's putting in a lower high every time. So people have been conditioned in these markets into thinking that you buy every dip, you know, and just buy. It's never going down. So what we need to pay attention to is the time when the trend changes and it does go down, so you don't get caught with your pants down. So what we're looking at now is, from that bottom capitulation in March, we essentially have, it's only a couple touches, but you can see we were sort of respecting this bottom area here. But more importantly, I'm going to make this one a little more visible here. More importantly, we're respecting this green support line right here. So we have a touch there, didn't quite get down to it, another touch, we break down from it, come back inside of it, find resistance at it. get back inside of it, come back down to it and touch again. This is obviously a tightening range that we're operating inside of. So when we get the break of that range in either direction, we would expect to get the measured move of the range, which, depending again how you measure it, basically from the top to the bottom here essentially. So the conservative measured move is, you could say the flagpole, you could say the distance of the pattern from top to bottom, but essentially what we're expecting is a measured move sell-off. So then if we take a look at our Fibonacci levels, the bottom of the Fibonacci down here was at $218. The top of our Fibonacci level was at basically $400. So easy math tells you that a 50% sell-off, which is what we're seeing here in this blue right here, which also corresponds perfectly with the measured move, that's going to take us down to $290. So we have two very important levels of confluence. We have the Fibonacci sell-off, and then we also have our measured move. And typically when those things are in line, it tells you that you're on the right track for a potential target. So that's what we're paying attention to. That's what we're expecting. And, I think that's probably reliable. Now, the real question is, though, are we going to move back up here to the top and stay in this pattern longer and then break to the upside? Or is this it and we're going to break to the downside and not be able to get back inside this pattern? I don't know. No one knows. And, the market will do whatever it wants. The important thing is identifying the potential and then, taking educated trades or positions accordingly to, put yourself in a profitable position with like high reward and low risk. So that's what we're looking for. So while I'm not convinced that this is it and we're just going to sell off right here, and, fundamentally, the reason I'm not convinced is, we just passed that $1.9 trillion, stimulus package. A bunch of that money is bound to flow into various assets. Some of it's going to go into the economy and actually stimulate, buying and growth and, move money around in a positive way. Some of it's going to get wasted on, lobbyist pet projects. And then a bunch of it is probably just going to disappear and no one will ever know what happened to it or get put away and spent years from now. It is, in fact, though, a relief package, designed around what's going on right now in the economy. And we would expect that type of stimulus, that type of money, to essentially flow into the economy one way or the other, whether it's people buying houses, whether, it's the stock market going up from speculation, cryptocurrencies, etc. But pumping that money out is getting a certain amount of that money is going to get spent. Certain amount of that money is going to get saved because people are afraid. They don't know when they're going to get more money. They don't know if they're going to keep their job. They don't know if the reopening is going to be successfully, taking place. But some of that money is going to immediately flow into, the stock market, the real economy, the fake economy, various speculative assets, etc. So the question is now, is that already priced in? Because we were already expecting to get 1.9 trillion and now we got 1.9 trillion. So what's going to happen? We're inevitably going to see a pop, a push up, some kind of money flowing in. But the real question is, are we going to see it breaking through resistance and then moving to the upside based on that? Or is this just us getting what we already thought we were going to get? So we're not that excited. It's like, imagine Christmas and, you asked for something and then you're really excited. You're a little kid. You can't wait to get the new video game system or whatever. And you're hoping and wishing and you're all excited, hoping you get it. And then imagine you sneak into your parents' bedroom and you see the video game system hidden in the corner, of the closet or whatever. And you're like, oh yeah, I know I'm getting it. So then now your expectations have been met, even though you haven't actually gotten it yet. You're going to get it. It's already there. They bought it. So now you start thinking, just human nature. Oh man, I wonder what games they got me. I wonder what accessories they got me. Oh, I can't wait. And then Christmas Day comes and, you get your present that you already knew you were going to get. You get your $1.9 trillion stimulus bill that you already knew you were going to get. You're already excited for it. You knew you were getting it. So now you don't get anything else. So now you're almost disappointed because you knew you were going to get that. And then you were almost expecting to get something else, expecting to get extra, games or accessories or whatever. And then you don't. It's almost disappointing. It's like anticlimactic because you've already processed, the positive stimulus, like mentally, of what you were going to get because you knew you were going to get it because you already found it. You peeked inside the closet and you saw it. So that's essentially what happens with these markets. They're forward-looking markets. So they're already looking forward to essentially what's going to take place. So they're expecting this money. Therefore, when they get the money, they're not excited about it. And that's exactly what's going to happen. And nobody knows how much of this actual money is going to flow into the markets. Nobody knows, is it going to be 10% of it? Is it going to be 2% of it? Is it going to be 50% of it? So that's where the actual speculation comes in. But the actual amount, the 1.9 trillion, has already been priced in. We knew we were getting that. The only way it would have been different is if we got more, we could have expected a burst to the upside. If we got less, we could have expected, a sell-off. But just getting what we already expected, what we already knew, what we were already planning on, does that actually change anything? Not for me, really. And again, I would expect to see some kind of money push into these markets, but I don't necessarily think it's going to be like overly bullish or anything because it's just getting what we already knew we were getting. So yeah, that's basically the S&P, and what I'm seeing with that, we're at a key level here. We could easily break to the upside and get a massive move, or we could easily see this down at like 290 very, very soon. So hey, appreciate it, man. Yeah, I love the new rig too. So far, this is obviously the first time streaming, but, just looking at like the stream analytics and everything, looks great. The internet connection's great. It doesn't appear to be showing like any kind of lag or anything. You guys let me know how the quality looks on your end. I'm still not exactly sure how to get it to go in like HD, but like when I've watched back some of the recent videos, even without going into HD, the overall quality has been phenomenal. So, just assuming that you guys feel the same way as well. So yeah, that's our Dow Jones, and looking at the indicator down here as well, on the daily, obviously this is kind of crazy right now, but this is huge. That's a big knife stab to the downside. And the previous time we got that knife stab was like the same level. And you'll notice that was essentially at this massive sell-off back here. That was a big sell-off. So the knife stab down here, and we got over 10% sell-off on that. So this time, it wasn't quite as big of a sell-off. 5.7, roughly 6%. But we got an equal knife stab, and that represents like the energy. And once it runs out of energy, it can continue going down past that. But the likelihood of another violent move like that becomes less likely. I'm going to take a drink here real quick. Hey, what's going on, guys? Welcome. Excellent. Glad you're liking the quality. Flawless. Yes, that's what I like to hear. Sounds good too. Awesome. What's going on, Jake? Welcome. Nice. I know this was sort of unexpected as well, but I would like to, hear your guys' feedback on, dates or times in specific when you're more available, when these streams are ideal. I like the idea of Sunday nights or Sunday mornings, just because we can either talk about what we're expecting to happen, like ahead of time before markets open, futures open, etc. I do sort of like Sundays for trading days, just because typically we'll see like crypto and like our futures, Bitcoin futures, like coming back into line. I was talking about that last week, how, if price runs up all weekend, we'll typically get a sell-off to kind of meet back up and close that gap on the Bitcoin futures, and then vice versa. If it's selling off all weekend, we usually get like a powerful move up on Sundays. So we're about to get into Bitcoin here in a little bit. I'm just running through the traditional markets, and then we'll do Bitcoin and some of the other cryptos. I've got a few on the list, and also, like always, if you guys have opinions or, requests, I'm more than willing to take a look at them as well. So, but we'll keep moving on here. I've been spending quite a bit of time on that. But overall, that gives us the macro view of what all these traditional markets are doing, because they're essentially all doing the same thing. We have basically the same thing going on with the Dow. This is the same time that capitulation event in 2009, essentially just moving inside of a less clear channel to the upside. What I like about the Dow that really I like to pay attention to, though, is this megaphone pattern. This is very important. This is, essentially a macro view of what's going to happen, because this is from 2018, end of 2017, beginning of 2018. And we have essentially created like this megaphone pattern, and you can even draw it a little different. I actually like it drawn a little bit better like that. But it doesn't really matter. You get the point regardless. Whether you use, sometimes I'll skip like that initial powerful top because we'll overshoot a target and then we'll come back down. That's like a more realistic target. And you can even drag this out here and see, that's our top, that's our top, that's our top. So we now have 3 tops right there. And then on the bottom, we have 1, 2, 3 bottoms right there. Obviously this is bodies. That's a wick, but you could have drawn this right away, as soon as we get that wick. And then you already have this drawn. And you'll notice when we come down to it, once again, we overshoot it slightly with that wick, but we never close outside of it. So we have a massive megaphone. And if you look at like what happens in the beginning, from the top to the bottom, it's an 11, 12% move. As this thing widens, as it broadens, the next sell-off from basically top to bottom was 20% move. And then the following sell-off from that, from top to bottom here, basically a 38.5% move. So also what I like to pay attention to is time cycles. So you can sort of see the distance from here to here is very similar to the distance from here to here, which is also fairly similar to the distance from here to here. Now it's not perfect, but there's definitely a noticeable, gap in between these, and then a noticeable gap on the bottom side in between these. And if you pay attention to that, without getting too technical on it, you can see that, the distance from here to here is the shorter one. The distance from here to here is obviously the longer one. And the distance from here to here is sort of right in the middle. So is it possible we're about to get another capitulation event like this? Now, granted, we're on the weekly, so it might be next week. It might be, in 20 weeks. But essentially, it would be somewhere in this range right here. So if we get another capitulation event like that, which, again, we went through, these are getting bigger each time. The highs are getting higher and the lows are getting lower. What would that look like if we came down here and, came near that bottom? It's a serious move. Obviously each one is bigger than the last, but, from top to bottom here, depending when we came down, we're looking at basically a 50% sell-off, a 50% capitulation event. So is that realistic? I mean, based on the last time, the time after that, the time after that, every time we put in a new high, we put in a new low as well. So the likelihood of us stopping back here at 18,960, not very likely. I think it's much more realistic that we come down here to like that 15 to 17,000 range, which is obviously a huge sell-off. So, I mean, we'll see. Again, I'm not saying this is the absolute top, sell everything, get out of the markets. But, in my opinion, and it's no secret. You guys, most of you are regulars that I see names over there for, you guys know how I do it. I take profits early and often because I will always leave profits on the table over ending up, a winner turning out to be a loser. And I think that's what everyone should do, in my opinion, not financial advice. It's always better to put something in the bank. And, if you're that worried about being out of the markets completely, what I like to do is I don't get out of the markets completely, but I take my profits into essentially like quote unquote a savings account. So I will take money out of cryptocurrency, profits out of cryptocurrency, out of the stock market, out of whatever. If I win a bet gambling, on a fight or something like that, I take that money, at least part of that money, out of my account. And then I buy physical gold or physical silver, because that way I still have exposure to the markets. I'm shielded from inflation, over time or whatever. I'm still getting to speculate, silver obviously more speculative than gold, but I'm still getting to speculate. So I get the upside potential, but I still have the downside risk as well. So yeah, it's possible I leave, an asset that's still going up and I go into gold or silver and it starts selling off. But typically, the volatility that we see overall in gold specifically, but also silver, is much less than what we see in cryptocurrency. So I like to always take my profits and just, put that money in the bank, get some gold, get some silver, log those profits, pull it out of my exchange account, whatever. It's harder to do that when you're not profitable, because obviously if you're losing more than you're winning or you're about the same, you don't want your account to go down. But, for most people, when you look at investing long term, I think you're wanting to regularly be adding money into you're going to be wanting to add money into your account over time. You know, you're essentially like, if you're looking at this as like a 401k or an IRA or something like that, you're not usually just making one investment and then that's it. And then you just want to keep growing it by trading. It's more like a regular thing. You're making, you know, weekly, monthly, annual purchases, whatever. So, you know, most people's account are growing over time from being profitable, but also growing over time from, you know, depositing more money. So, you know, it's not as important that your value goes down because it's always going up essentially in the same way. But you're taking those profits and you're just basically rebalancing your portfolio from one profitable thing into another. So if all of a sudden, let's say, you know, silver moonshotted and went up to $100, I mean, in all reality, what I would do is I would sell a bunch of my silver and then I would buy more gold, because the silver gold ratio would obviously be, you know, silver in relation to gold would be going up faster, you know, presumably. Therefore, I would then take that silver and buy gold and then assume that the silver gold ratio is going to go back down and kind of level back out. So, but yeah, same thing with the Dow Jones. You know, you see what's going on here. We're potentially very likely at least a micro top. We have been able to, with that powerful candle back up, save the 821 cross to the downside. But, you know, are we just going to put in another higher low, or I'm sorry, lower high? So we have a high right here. We have a lower high based on candle close. And now here we have another lower high based on candle close. So are we just going to get another violent red sell-off? In my opinion, the way it looks, probably. You know, again, if we look at the knife stab down here, that was our bottom when we got that violent knife stab right there. That was our bottom when we got that violent knife stab right there. This time when we got it, we came in and put in a new high. This time when we got it, you know, it's still undecided. We could easily come back up here and put in a new high. Everybody gets bullish again, and then we sell back into it. That's how distribution takes place. You keep convincing people it's going to sell off, so they sell into it, and then they have to rebuy from you at a higher price. So you basically just prop up the price, prop up the price, prop up the price, and then you get a capitulation event like that. So I'll run through these other ones a little bit quicker, and then we'll get on to crypto, because I know most of you guys are crypto guys. So need to see the fight bets too. Yeah, honestly, I should have done really well last night on the UFC fights, but that illegal knee that Aljo took to the face absolutely destroyed my bets. I had Jan with the upset. I had one of my parlay picks was like I think it was 11 fights or something like that, and Aljo taking the quote unquote win from that illegal knee made me lose my parlay, because I had Jan to win, which he was. He was, Petr Yan was absolutely destroying Aljo. But, you know, I guess if you spend enough time on your knees in the middle of a fight, you're bound to get, like, kneed in the face. So, but anyway, Nasdaq, same thing. We saw the tech burst back to the upside, saves the cross. You know, are we going to come up here and take out the high and move back up, or are we going to keep going back down? So, you know, exact same thing. We got to see what happens. This is what I'm paying attention to over here, though. We have lost the slope. We sort of lost it a little bit right here, but we still had the histogram above it. But, you know, that was from November last year. And now here we've lost it. It's turned red. We're well below it. You know, typically when that happens, it'll either bottom out in that area or you'll switch the trend to the downside. So, again, we're paying close attention to what's going on here and these key levels. All right, let's look at Tesla now. Oh, man, this one's a doozy. You know, you guys have obviously seen my view on Tesla. I think overall what's going on right now is I think Tesla on the macro is going way higher, way higher. But it looks to me like we put in from the bottom here at, you know, $33. And then the 1 was our top in February of 2020. And then the bottom was, you know, March, obviously capitulation in 2020. And then from there, I think that was the 1. That was the 2 retracement. And you'll notice if you fib from the bottom to the top, the retracement comes down to the 618. It's actually slightly above the 618, in between like the 0.5, but it's just about there. So then from there, if we take the next move up as our 3, so that was our 1, that was our 2 retracement of the 1, which was 61.8% or roughly. And then we get the 3 move up here, which was our previous high we just got right here at $900. What I'm expecting is a potential sell-off from that back down to either the 0.5, which would be right down here at $257, all the way down as low as the 618 at $188. So somewhere in like that 220 range, roughly. And then the way that the Elliott wave works is the top of the 1 and the bottom of the 4 can't overlap by more than a wick on a highly leveraged market on a long time frame. So a daily or weekly wick below this right here, below $197 is okay. But if we start closing daily or weekly time frames below $197, that invalidates this pattern, and I would be extremely worried about the overall, longevity of this prediction or this chart, and Tesla over time. Obviously, something probably went wrong fundamentally. So that's what I'm looking at right now. Is it possible now? This white Fibonacci level was from that little low that we got right down here. It was like a micro low. We're interacting with that. When we sold off initially, we came down to the 236, and then the 382 came back up almost to the top. Then we came down to the 0.5. So we're very clearly interacting with this Fibonacci here in white. So it's definitely relevant, and I'm paying attention to its relevancy. You can see, obviously, we touch it here. We come back, resistance, gap up, support, come back, resistance, sell back down. That wick, again, I'm ignoring. I don't know what the deal is with that. Basically a stop hunt. But there was one previously on TradingView, and then they fixed it. And then this one's been here for days, and they haven't fixed it. So I don't know what exactly is going on with it. But when we sold back off here, we sold down exactly to the 0.5, and then we came all the way back up to the 382. So the next micro target is obviously going to be that 618. But the 618 lines up with the larger Fibonacci level of the 236. And if that 236 gets hit, that's essentially when we can validate that this swing, this fib target, is like in play, and we're paying attention to that. And we would expect next after the 236, obviously bouncing around, moving back to upside. But then the next target would be the 382, which is $348, which is almost a 66% sell-off for Tesla. So are we going to get that low? I don't know. I can't see the future, but sure looks likely here. Are we going to get down to that 0.5? Are we going to get down to the 618? I don't know, but we'll have plenty of time to determine that, when it starts happening. But most importantly, Tesla was one of the first stocks, and granted, it was extremely overbought. Tons of people speculating on it. It's already gone parabolic, but it was one of the first stocks to enter into a bear market. Bear market being like over 20% pullback and a cross of the 8 and 21 on the daily. So we've got a negative cross on the daily at 826. I can't speak for you guys if you went short there or not. But if you did, you're up basically at this point in time, like, 20% basically to 25%, depending if you close out your short or not. Me personally, or if you're, selling calls or buying puts, whatever. Me personally, I almost always close my positions just above a 200. So when we're coming down to the 200 moving average, I almost always close my position or deleverage. Just because we always see a massive bounce off of the 200s. It's just what Wall Street does. It's what technical analysis does. So let's go. And I never sell everything. I never sell all of something. I always keep some of that position open just in case, it parabolically goes back to the upside. But I would always rather de-risk and then rebuy higher and be wrong than give away my profits or take a loss. Let's look at MicroStrategy, and then we're going to crypto. MicroStrategy, also one of the absolute weakest. And coincidentally, the two main companies, MicroStrategy and Tesla, that come out and put massive buys in on Bitcoin are both topped out, both in a bear market, and, both like two of the absolute worst performing stocks right now. MicroStrategy is already down from its parabolic ridiculous top of 1300. It's already, gone down 58%. I mean, stocks shouldn't even normally correct that much, which is why this thing is clearly in a bubble and it's probably going to die. I mean, it was already a dead company and they basically just turned it into a Bitcoin ETF. But, just like GBTC, there was points in time when you were buying GBTC at like a 40%, premium over the amount of Bitcoin that they hold. So eventually you expect that premium to go back to even, roughly, or just slightly above. So MicroStrategy, if you take up how much Bitcoin they have, and then you take up how much their stock went up, in the time Bitcoin went up, MicroStrategy went up from $100 and $132 to $1,300. So it went up 10 times. Meanwhile, Bitcoin, was at $10,000 and went up to $50,000, $60,000. So it went up 6 times. So at some point in time in there, there was a massive premium on this stock over Bitcoin, and I think there still is. I would have to do the math on it, but as far as I'm concerned, this is a dead or dying asset. It's always going to have a value equal to the amount of Bitcoin that they hold, but danger. All right, so let's go over to cryptos next, and then we'll work our way back to gold, silver, uranium, First Majestic, Tilray, that stuff as well. So, not sure. I didn't really pay attention to the time either. But we'll just run as long as it takes. I'm not worried about it. Let me just check the comments here real quick. Take a drink. Yeah, will be posted later. Sunday evening is good. Weekly close. Yeah, weekly close. And then also like the open for like traditional markets and everything. So that's why I really like Sundays. Sunday morning is almost always a good trade. Like Sunday morning to Sunday night as well. Fight bets. Yeah, I mean, again, I don't want everybody just doing everything I do, but I've been a huge fan forever. I watch the fights, so I have a pretty good idea of most of these fighters and what's going to happen. And also just enjoy it. I don't watch any other sports. I have no interest in any sports but mixed martial arts. Well, and fighting in general, wrestling, jiu-jitsu, all that. But because I'm not spread thin between like soccer and football and baseball and basketball, I'm much more concentrated on single sport. Therefore, I have like the stats and the knowledge the same way somebody else might. So, yeah, trades are extremely interesting right now. I mean, there's so much going on in these markets. It's a great time to be alive, but it's also a crazy time to be alive. Especially if you have like old family members or young children. It's just crazy. People want stability. They don't want to have to worry about stuff like that when they have kids or people that are in danger. Run as long as it takes. Yeah, right. Yeah, no. Well, that's one thing I do love about the community and you guys specifically is, my regulars, the majority of you guys, like, the more the better. It's only when I get like random people pop in that they're like, I just want a 43-second video telling me whether I should buy or sell. I'm like, dude, this isn't the channel for you. I might go on a 15-minute rant. Sunday's perfect. Okay, great. Yeah, I want to start doing at least minimum one live stream a week. I'd like to get to where I'm doing 2 or 3 a week. And putting out, regular videos as well. I've been extremely busy lately, so I've been kind of slacking on the videos. But there's also not a ton going on either. I mean, I can do 1 video a week or 2 videos a week, until we're at a decision point in the market right now, obviously. So, until we get a decision in one direction or the other, there's not a ton I can tell you. When we sell off, get out before we sell off and then buy at the bottom and then sell at the top and then buy, but it's a tightening range. So, yeah, definitely an education channel. That's the goal here. The goal here is to make everyone else good at what I do and what we do and build the community over time. It's just about like the cost benefit analysis for me, because obviously I don't work a regular job. I haven't worked a regular job in years, but I have my own, obligations, running my businesses and whatnot. And this for me is essentially like a nonprofit. Everything I do here is, to help the community, to give away for free, obviously with a long-term goal of eventually like monetizing this and, building up a community. And essentially, like, as a community, if I teach a bunch of people how to win at trading or help other people to learn or provide useful technical analysis and 100 people benefit from it instead of one, being me, it's mutually beneficial. Therefore, like, over time, when just like any business, if I do it by myself, I can do well. If I do it with a community or with employees or whatever, I can do even more well or better or the best. So that's the goal over time, is to build this into, a community that reciprocates, obviously, like, at some degree, like financially to me for the financial gains that they get over time. So, and again, it's also my passion. I love it. I enjoy it. I like to share all my, knowledge with people you know, trading is extremely lonely if you don't have a bunch of like friends and you're not working at a trading desk or whatever and you're just staring at charts all day. And it's also nice to get other people's perspective. Sometimes I won't look at assets that other people want to hear about. So, you know, they'll just say, hey, look at Binance Coin. And I don't have a Binance account. I never really look at Binance Coin. I've never really traded Binance Coin, but it's a great coin to look at. And I can understand why people want to see it because, you know, it's probably one of the most profitable cryptos over time and one of the best looking charts. So, all right, so let's jump back in it with Bitcoin here. I'm going to take another drink real quick. All right, so let's take a look at Bitcoin, and then I'll jump back over, and we can keep talking a little bit in the comments here once we get through some cryptos. Initially, I was planning on looking at Bitcoin, the CME futures chart, Doggy Dogecoin, and if you guys are over that, I don't know who in the community is still into Dogecoin. I can knock that off the list, but I have Ethereum as well, and then I think I have on the other one Polkadot, Uniswap, and something else too. We'll get to it. All right, so Bitcoin daily, you know, this is exactly what we've been talking about. This is a decision time right here. We're paying attention to the 8 and 21 cross to the downside. Last time we got it, we saved it at the 50-55 moving average. Got that next move up. Came back down, and again, it looks like so far we have saved it. You know, we saved it right here. We were below it. We didn't quite make it down to the 8 and 21 moving average, but we stopped that cross. We averted it at least temporarily. And now we're back on top of it, and we're pushing to the upside. The close that we got, this last daily close today, was higher than the previous close right here. But, so as of now, it looks like we've saved it. We also just got this hard buy signal. You know, that cross with the hard buy, that was the same signal we got right back here when we crossed this back to the upside. And when we crossed that back to the upside, Bitcoin doubled. It's up 73% from there. So if we go up another 73% from 50,000, you know, that's basically like up in that some of those Fibonacci extension targets close to like 90, 100,000. So, but, you know, we get fake outs like this too. So we have to be very careful and pay attention to what's happening, because when we're at a tightening range like this, it's very easy to just get that cross back to the downside and avert this, and it'd be a fake out or a failed rally. So paying close attention, but optimistically bullish. And if you look at what are my like 3 main, you know, things that tell me, is this legit or not? The 3 things I go by are the 8 and 21 cross. Are we in an uptrend? Which we are. We saved it. The cross right here between the blue and the purple, which again, we just got the cross. That's a buy. And then also we got 2 green histograms in a row. This one I break down into 3 ways of identifying it. 2 histograms in a row, 2 green histograms in a row. That's one entry. The second entry is the cross, the blue instead of the red. Slope flips back to the upside. Typically doesn't tend to happen before we're above it, but in this case, obviously we are. And then the third one is the histogram moving above, you know, the slope line. So regardless of what order those happen in, 2 green histograms, I enter with 33% of my position based on this indicator. The blue slope, I enter with another 33% of my position based on this indicator. And then when we cross the histogram above the slope line, I enter with the other 33%. So this indicator now is already giving us the first of those 3. So I'm already in with 33% of this indicator. We got the hard cross. So again, you know, I'm already laddering back into buys off of that position. And then we've essentially averted this cross and took out that previous high right here. So again, you know, a portion of the position back on long. And I mean, I scalp from the bottom too, and then leave my scalp positions open as well. But, you know, basically that's how I use these indicators for long trending trades. Now, the next and final most important thing is once we take out the previous high, the all-time high right here. And then after that, you know, it's risk on all the way. And you'll see that here, that was our previous high. I'm not the only one who thinks like that, because the second we take out that previous high, we get a massive move up, consolidation, continuation. And then, you know, potentially if we're coming back down, what I would be looking for is this same level right here on the daily close, 40,732. So if all of a sudden this violently starts selling off, we get a bearish engulfing candle right here. This crosses 821 to the downside. Next target's going to be that green level at the 50-55, which are right on top of each other right here. It's also, let's zoom in here real quick. If you're not familiar with this indicator, it's available for free. All these indicators are available for free. They're all down in the description. I highly recommend it. You can turn on and off any of these features that you don't like as well. So, but we had the parabolic SAR was red right here. We took that out, moved it back to the upside. So we have these green dots now. You see these red dots right here. That's our resistance. Those are our pivot points, the binary pivots. And then on the bottom here, we have the blue binary pivots. So the blue binary pivots, the green parabolic SAR, and then both the 55 exponential and the 50 simple, the two green moving averages, are all right here. That is a ton of support. And that support also just so happens to line up with basically that previous high right here. So that 43 to 44,000 level is huge. And you'll see that, that was our little touchdown here basically. So if we come down to it again, it's going to obviously be support because of that touch as well. But if we start getting, looking like negative movement here and it's going to come back down, my target would basically be the previous close right here at 40,700. But that would be for a close because we want to see a close come down and close above that and then, find it as support. But we could easily wick down to like 38,465 very easily down to that 89, scare the hell out of people. And people would think, oh, this failed as support. It's over. It's dumping. It's going down. But in all reality, that's extremely strong support and would look extremely bullish if we found support there and moved back up to the upside. I mean, it already looks very bullish, but this could easily turn around, in a heartbeat. And if we go down to a little bit shorter of a time frame, we can look at what's basically been what's been going on here. And you see what I'm talking about with the 200 moving averages. The first time we come down 200 moving average, we get a violent move off of it. Second time we come down, we do not close below it, and we get a less powerful push off of it. And then we come down to a new low. So we're obviously high, a low, a lower high, a lower low, a lower high, a lower low. So what we're paying attention to is when we come back up, do we take out this high? Do we take out this high? So here, that looks bullish because we took out this high. Come back down and we put in a micro higher low. That looks bullish, but we're not expecting that that's just going to be, movement to the upside. But then this looks bullish too. Once we take out that previous high right there, that's another bullish sign. So then when we do sell off, what are we paying attention to? Do we take out the micro low, which we did, so that starts looking bearish again. But in all reality, we're still bullish till we take out this low at 43,300. So as long as we're staying above the 200 simple and the 200 exponential, and we're putting in higher highs, that looks amazing. Because now we were in a downtrend, and now we're starting an uptrend. So even if we come down here now and come all the way back up here and put in a lower high than this, as long as when we come back down, we don't take out this low, we're still in an uptrend. Now, if what happens is we have this high, then this low, then we put in a lower high, we do not take out the all-time high, and then we come back down and we do take out this low, that is when I'm legitimately worried about the trend, because then it looks like an A, a B lower high, and then C correction. But again, I'm looking to buy that correction. Depending on what time frame you're looking at, I would expect it to come down to one of those levels we just discussed. So it's very, very possible that what was I going to do? Oh, it's very, very possible that we're getting like a ABC correction right now. Like something like this, basically, where we have an A, we have a B, we get a C back up here, or I'm sorry, the other way around. That's our start. That's our A. That's our B lower high, and then we get a C. It's even possible the B comes up higher. It's possible that it's way lower and weak. But what we look at to, basically determine like our potential targets for that is, we'll take our Fibonacci of this macro or micro swing. So the top, the all-time high right here, to that bottom swing right there. And this is basically like our validation invalidation range. So as long as we're playing inside of this range, it just looks like a retracement. And then we would expect higher, higher highs. But where would we expect this to top out if we're going to continue to the downside is a key fib level. So you'll see we immediately sell off, come back up, sell off to a new low. That's where we're fibbing from. That's our low for the Fibonacci. That's our A essentially of the retracement. Which this could look like an A down to here, a B to there, a C to there, and that's it. We're done. The retracement's over. But what I'm paying attention to is from that low, I want to see what happens with this Fibonacci level. So we come up immediately to the 0.5, and then we sell back down, not quite to the 236, and then we come all the way up to the 618, and then we sell down exactly to the 236, and then we come up just above the 382, and then we sell back off above the 236, and then we come straight up to the 0.5. So now what am I expecting? I expect us to come up here and take out this 618. So then my next target is the 786. So my next target to the upside is 54,900, which from here, that's like a $3,700 range. So, that's a great range. That's an awesome, buy, obviously, and, potential target for that. So that's what we're paying attention to now. Now, is it possible we start showing weakness right here and this fails? 100%. And then that would be the B right there. And then the C, essentially this does not take out the high right here. And then the C could potentially come back down here to either retest the low, put in a new low, something like that. So, with trading, the market is always going to tell you what it's going to do. The most important thing is not predicting what the market's going to do, but figuring out, okay, what is telling me, the market is going to go to the upside? What is telling me the market is going to go to the downside? And then finding out pivot points. Where is this market likely to pivot? The market is very likely to pivot at a key Fibonacci level or a moving average. So that's why I use these two things specifically together in conjunction. They're my two most powerful tools. Moving averages are obviously, you see, this was kind of in the middle of nowhere, but that was the front run of the 200. This is right at the 200. This is right at the 200. This is right at the 200. This is the front run of the 200. So next time we come down, what are we going to do? Probably front run the 200 again. If it's bullish. So then we look at the Fibonacci's for our targets. So the next target to the upside, let's look at it this way. If our target here is 0, and then our target to the downside is the 236, our next target to the downside is going to be the next highest fib level. So the next time we sell off, I would expect us to sell off back to the 382. So I'll take a buy there, which is going to line up with the 200 exponential and simple moving averages, roughly, depending when we get there. Or it could be the 50, depending when we get there. Next target to the upside, where I would expect a retracement or a sell-off. Well, if we made it the first time to the 0.5, the next time to the 618, the time after that, I would expect us to come up to the 786. So now we have a very, very clear, defined trading range that we're paying attention to. And as long as we're inside of that trading range, we're going to trade that range. So if our next target is going to be, so if we previously went to the 236, our next target is going to be the 382 to the downside, and the next target to the upside is going to be the 786. So is this a good area to take a trade? No, this is the worst possible area you can take a trade right now because we're right in the middle of that range. We want to be buying support, so we want to be taking buys off 48,543. We want to be selling resistance. We want to be selling out of our position or hedging our position with a short at 55,000, 54,900. So, obviously if you just take, a long position off the bottom of the range right here with the target to the upside, that's a 12.8% move to the upside. So when do we invalidate that range? Based on a wick, based on another Fibonacci level. I would say if we took out this previous Fibonacci level, it looks like shit. So we want to worry. So that would give us basically a 12.8% move to the upside and a 4.4% move to the downside. So it's essentially a 3-to-1 trade. It's better than a coin flip. And that's what we're looking for. And in the same way, obviously in hindsight, if you saw this 618 as a key level and took the trade to the downside, assuming that you're coming down to the next highest fib level, you would assume that you're going to come down to the 236. Because the previous time was the bottom. So you would assume the next fib level would be support. So if you took that trade, it would be the same situation where if you blew through it, you obviously be scared of your short if you come up, to the 786. But if we did the exact same thing, if this time when we come up to the 786, we take a short off the 786, invalidated if we, go past the 886, And what's our target going to be to the downside? Well, we would expect at the absolute maximum, we do not want to come down below the 382. Because if we come down and take out the 236, then it's going to look like this was just a lower high and then we're selling off. So again, you know, we have basically a 3.6% to the upside, 3.6% stop loss and an 11.28%, you know, trade on the short position. So now, based on that trading range that we're looking at, we now have a potential for an upside target on a long. If we come back down here and retest for support, that's where we're going to take a long off that position with a 3-to-1 risk reward. And if we continue to the upside right here and don't get an opportunity to take that long, that's fine. Or if you're already long like I am, that's great too. You know, but we're going to be looking to take a short position or hedge our, you know, spot position at that next key level. So, I'm sorry, the next key level, which would be that 55,000 range. You know, and then we're wrong and we're going to get stopped out with a 4% loss if on that short position, if it takes out the 886, at which point in time, if we take out the 886, it's more than likely going to new all-time highs. So we don't want to have an open short position because we don't want to be short because we're long because we're taking out new highs. Blue sky breakout, baby. So that's how I trade based off of moving averages and Fibonacci's, the most basic way. And then, you know, what are you looking at then? You're looking at momentum. You're looking at, you know, momentum indicator oscillators. But essentially all we're doing is trading with the trend. We're just looking at the overall trend and just trading with it. Because is it easier to swim in a river upstream or is it easier to swim in a river downstream? It's easier to swim downstream because you're going with the current. You're not fighting it. You can throw an inflatable little donut in the water and you can sit on it and you can travel 10 miles and crack a beer and relax. And that's how I trade. I trade on a floaty in the river drinking a beer. I'm not trying to prove anything. I'm not Michael Phelps over here. I'm not trying to swim the English Channel, you know, against all odds in freezing cold water. No, thank you. I'll take the easy trades all day. And that's what I do. And the direction doesn't really matter. It's always easier to trade to the upside. Always. Because the upside potential is unlimited. Bitcoin can go up 100,000%. The S&P can go up 1,000%. You can only ever go down 99 to 100%. If you take a short and it goes down to zero, you made 100%. If you buy Bitcoin at $50,000 and it goes to $110,000, you made more than if Bitcoin goes to zero. If you have a long and a short, Bitcoin goes to 100,000, you win more than if Bitcoin goes to zero. So it's always better to trade to the upside. And it's diminishing returns to the downside as well, because the likelihood of something going to zero is extremely unlikely, because there's always going to be some cult member who loves it. You know what I mean? It's the same thing with XRP. When XRP was getting crushed and everybody was, oh, it's it. XRP's dead. The SEC's after them. We're done. We're done. I mean, are we though? Or did we take that buy at, what was it, 12 cents or 17 cents? We took that buy at 17 cents based off Fibonacci levels and moving averages. And what happened? The XRP went right back up to where it was at. It went straight back up to 60 cents. Did it die? No. Is it going to die? Maybe. But is it going to die overnight? No. Take the easy trade. Always take the easy trades. That's what I do. It's all about risk reward, position size, and management. You know, that's what it all comes down to. But the most important thing is trade with the trend. Swim with the current. That's how I look at it. So that's what I'm looking at for Bitcoin right now. And, you know, again, if we end up entering a short position like this, when do I move my stop loss? Every time we break down from a key Fibonacci level. If I took a short off of this fib level, the 618, what am I looking to happen? I'm looking to break down past the 0.5. And then after we break down past the 0.5, I'm looking to potentially move my stop loss down so that I cannot get taken out of a position. So I'll have a say I took the same short, which I did, right here. And this is the position I'm looking for. This is the trade I'm looking for. I'm looking to sell the 618 because that is the next highest fib level. And then I'm assuming we're going to stair step our way up, whether we're going up or down. And then when we come down, I'm looking to stop at the next highest fib level, which is exactly what we did. So we have in place a 5% stop loss and 11% reward. So again, it's over 2 to 1, which is, I won't take anything less than 2 to 1 because I like to win And I like it when it's easy to win. I don't want to just coin flip. I can coin flip at a casino and have fun with alcohol and pretty girls. That's not how I trade. You know, well, maybe not now, but you used to be able to. I can coin flip with a digital dealer and play roulette on my computer and drink. But anyway, so what you're looking to do is, once you take out that next fib level, you want to now move your stop loss down to your entry point. So that no matter what, if we're wrong right here and this bounces and it comes back up, it takes out our stop loss and we're break even and the trade's washed and we lose nothing, we gain nothing, but price continues to the upside and we're not just upside down in a losing position. So then essentially, what are you paying attention to? It's essentially the same as if you just took this trade. So now once we've broken down from that, our stop loss is back up here. This is profits that we've already made, but we haven't logged in yet. And then what happens when we break down to the next fib level? We do the exact same thing. We move our stop loss down to the previous fib level, and then we move our, you know, I want to say entry, but it's not really our entry, but it's now like what we're looking at for the move. So now we have our stop loss here. So if it bounces here, comes back up, and then continues on, we get stopped out of the trade. But in this case, if it breaks down from that next level, which it already has in this case, but if it breaks down from this level and then comes back up and takes out our stop loss, we've logged in these profits and they're already in the books. So then as soon as we break down from this level and we start getting close to the key level right here, you can do the exact same thing again. You act like you just took a long off this position and then you move your stop loss up right here. So in this case, once we came back down here and we, you know, basically we hit my actual target already. So I take like between 33 and 50% off the table right away. But in this case, once you took that off the table and you come back up, this is actually the candle that takes me out of the remainder of my position. And that's fine because now I've logged in all this. All this is profits in the bank. And then a percentage is profits right here as well. And then that, you know, I left some of it on the table when I got stopped out on that position right there. And then when it comes back down and puts in a higher low or same low based on candle closes, which this was actually a really easy trade right here. Let's go to a shorter time frame. I'm gonna get rid of this. This was one of those like gimme looking trades. If you had basically a support resistance channel, there was two ways you could have looked at this. You could have looked at it based on candle closes, which essentially like this was our channel right here. And once we broke down and found support right here and came up and broke out of it, we looked for a break and then a retest and we broke down and did not close back inside the channel. That was a retest buy. And then you could long that. But we actually came down slightly below it. So you could have potentially gotten stopped out of that position depending where you put your stop. But you were only ever like, you know, a tiny little percent in the red right here. So you probably wouldn't have gotten stopped out. But in all reality, if you really paid attention to this thing, depending on what time frame you were looking at, and depending on what exchange you were looking at, I had it drawn both ways like this. So, and I always change these colors just because I like blue and green for support. I like red and purple for resistance. You can make them whatever color you want. But this to me was huge. And you'll see obviously that corresponds with the 821 cross, corresponds with the 821 cross. So either way, you would have been, you know, if you were using moving averages, you'd have been in a nice position. But, you know, you see basically we get the confirmed breakout. This was our measure move target from the breakout, which we did not hit immediately. This was our larger measure move target from the larger pattern right there. Excuse me. So we get the breakout right here, come back down, find support, continue. Do not complete the measure move, but that happens a lot, and then you get a sell-off. But as long as we don't take out this low, we're still bullish, based on closes, obviously. So here we go. Breakout of the second pattern after that, which we topped back out at that same resistance again. So you're thinking, okay, maybe I'm looking at this wrong or too short of a time frame. Maybe I'm wrong, you know, and I'm going to lose on this trade. Let's see if when it breaks out here, does it come, or breaks out here, does it come back down, find support, and then break through this? And then when this one breaks out right here, you say, okay, now are we going to hit this measure move? What I'm paying attention to is, are we going to come back down here and retest this for support? So we come back down, don't quite make it down for support, which that's not a confirmation to me. I like to see it actually test for support. And then we come back up, put in a lower high, and you say, okay, wait a minute, are we headed back down? And then what happens? The perfect trade, the absolute perfect trade right here. Because we come back down and do the same thing again. If you missed your opportunity right here, you got an even better opportunity on the confirmed breakout of this pattern right there. And then what happened after that? Came up, hit our first measure move perfectly. And then what happened after that? Hit our second measure move perfectly. I mean, look at that. That is absolutely to the T. We hit our measure move. So either I'm the whale that's controlling the entire markets, or more likely, because I'm not, and I'm telling you guys that truthfully, it's no secret, I'm not the guy controlling all the crypto markets. They're probably using algorithms or the same trading strategies or techniques that I'm using. Because, I mean, I just drew that in a second, real quickly, threw that up there, and it lines up perfectly. And, you know, if you look at my charts ahead of time, I have that stuff in place. So what does it look like happen right now? It looks like we hit the exact target. So what are we paying attention to right now? What's going to happen next? We failed to get the higher high right here temporarily, but our previous, after that high, our previous support level was one higher fib level. So what do we expect to happen right here? Well, I would say probably the bullish scenario would be we find support right here at 50,300. The more realistic scenario, and what I would really like for confirmation, is we find support right here at 48,559. And just so happens, coincidentally, 48,559 is the magic number. Let's flip over here really quick. This is our Bitcoin CME futures chart. What's our top right here? When we closed, it was 49,700. So are we going to come back down all the way and close this gap? Probably. We're probably going to close this gap. So 49.5 looks real likely to me to happen. And now 49.5 would be right here in the middle of like nowhere, basically. You know, right down around this area. So could you front run our long trade slightly out of that range and take it at the gap close? Is it more likely that we get a wick down here in addition, you know, to close that gap? We come down, close that gap, and then move up, but we leave a little wick behind? To me, it looks very likely. So this trade right here is starting to look really, really good. I mean, the likelihood of this trade playing out now, you know, obviously we could find support right here and keep running, and, you know, you're still in your long, and that's great. But the likelihood of getting this entry right here somewhere in this range looks very good to me. And you don't always have to like penny pinch either. You know, you can take a trade at the bottom. You can take a trade in the middle. You can take a trade in the top. But the idea is that it's the same trade. You're just using multiple entries to get into that trade, because the last thing you want to see happen is this price action comes all the way down. You don't quite get into your trade because it gets front run, and then you're literally pennies away from your entry, and then it goes in that direction. And you say, holy shit, I just missed the boat. It was a perfect trade. I saw it. I had it set up, and I missed it. And that sucks, and we've all been there. So that's why you don't penny pinch in these markets. That's why I always front run taking profits and taking entries. I don't need the absolute top. I don't need the absolute bottom, but I need to be right when I'm right. You know what I mean? I don't want to sit there and watch price action move exactly how I knew it was going to move, and I'm not in the trade because I was, you know, being a tight ass on my entry point or my exit. So let's look now at the moving averages on this 4 hour, and then we're going to keep running down some of our other assets. So let's turn back off the drawing tools, and this is exactly what's happening on the long term. When we got the 821 cross right there, we got that capitulation, you know, whatever. 821 cross, we came back up, tried to cross it back to the upside, failed. Continuation to a lower low. And I said that ahead of time, you know, that this was a bullish buy up, but that I was expecting us to retest 821 and then sell back off. And it happened exactly like I said, to a new low. So that was a great short right there. But you don't want to get greedy either. So you either front run the 200 or your trailing stop takes you out. But as long as the 8 and 21 are still crossed to the downside on this 4 hour, it's still bearish. And it's like a prerequisite of a daily cross to the downside. Bearish cross is a 4 hour cross. So if you're looking at the 4 hour and it's crossed and strengthening to the downside, you're potentially thinking, okay, wait a minute. This 821 on the daily is looking like it's in danger too. So let me pay attention on the shorter time frame what's going on here. But let's not front run that this is all of a sudden a bear market now, you know, because the 8 and 21 are still in the upside on the daily. So while we're looking to scalp and swing trade this move, we're not looking to just change our position around. Now, if that 821 crosses to the downside on the daily, that's when I flip. I'm not just going to sell all my crypto and give up, but that's when I flip to either neutral or short. Net neutral or net short, not just scalping. So for me, that's a key level I'm paying attention to, and we're very close to it. We could easily sell off and give it up now and go, and that's it. And that was the end of the bull market, and we're done for the next 3 months or 6 months or 2 years, whatever. But has it happened yet? No. But are we paying attention because it might happen? Yes, and that is what's most important. Pay attention to the potential scenarios before they play out. So if they do play out in the middle of the night or while you're watching, you're already ready for it. You already have your targets in mind. You have your entries. You have your exits. You have your stops. It's all planned out. It's like anything. That, you know, if you're playing a sport or, you know, UFC or whatever, the guy with the game plan is going to win most of the time, everything else being equal. If you both have equal skill level and one guy has a plan and the other guy says, fuck it, I'm going to wing it, the guy with the plan is going to win because he has a plan for the guy who's going to fucking wing it. So paying attention to this now, we got the 821 cross back to the upside, then back to the downside, then back to the upside. So this to me is basically just chop. So we got to be real careful with moving averages and chop. They're basically useless. But as long as we're above the 200 exponential and 200 simple and we're moving to the upside, they have a slope to the upside, this is still bullish to me on a 4 hour. If we break down from here and start dragging these and we give up the slope on the 200 exponential and 200 simple, on a 4 hour, I will say we have entered a bearish trend on a 4 hour and are potentially looking at, you know, some serious downside. So that's what I would be paying attention to. And then obviously, you know, if you switch back over to the daily, we're so far away from that ever happening. We're so far away from even touching the 200 moving average. It's back down at like 28,000. The simple is back down at 23,800. But it's an actual fact that every market on a long enough time frame always touches its 200 moving average again. So the further we get away from the 200 moving average, the more likely we become to touching it. Because, you know, the time frame, the longer we're away from it, the more likely it is going to happen, because eventually we're coming back to it. We know it. It's an absolute fact. Every market ever has eventually come back down to its 200 moving average. So, and including Bitcoin. So we know eventually it's going to happen. The question is, are we going to have a little sell-off like that and then continue to the upside, have a little sell like that, continue to the upside, and by the time we touch a 200 moving average, is it going to be at 50,000? Is it going to be at 100,000? Is it going to be at 1 million? That's what we're paying attention to. But we know eventually we're touching these things. So the question is, are we doing it tomorrow at 28,000, or are we doing it in 6 months at 50,000? So I'm going to jump over to chat here and take a look real quick. And then we're going to switch off of, I already basically touched on what I needed to touch on for futures. You know, the Bitcoin futures chart is essentially, the difference is this thing looks more bullish because the 8 is way above the 21. But we don't have a confirmed close higher than these two candles right here. So if this candle just starts selling off, which is what I would expect to happen, come down and at least close that gap. Depending on where we close at, if we close lower, we will not have a higher high on the close on the daily. We will have a high right here. We will have a lower high right here. And then this would be essentially another lower high. Could easily continue up and take it out. But also, we still have a downtrend on the parabolic SAR in red. You know, we're definitely, if we sell off, coming back down to 47,000. But after that, you know, the 50 and 55 right here line up with that previous top almost perfect. And that's at like 39,000. So that's what we're paying attention to over here. So the CME chart actually looks slightly better, but also worse, if that makes sense. So, all right, so I'm going to take a quick break, drink, check out chat, and interact with you guys a little. And then we'll check out the doggy coin. Love the rants. Yeah, I know. People love the rants. I honestly didn't think people liked rants. Thought like maybe it was like annoying, or when I go off on a tangent, like people didn't like it. But the fact of the matter is, the probably number one comment I get from people is that they love the rants, which is kind of funny. Appreciate the efforts. Hey, I appreciate you guys being here, man. I appreciate the interactions. I appreciate that, like, I don't know if it's just luck or fortune, but I appreciate that eventually the shitty people always go away and I could just get stuck with the good people. Because I don't want 1 million people I don't want all kinds of negativity or whatever. I would rather have, it's like friends. You want 100 shitty friends, 10 okay friends, or 2 good ones? I'll take 2 good ones because it's easy to find shitty ones. I could find 1,000 shitty friends tomorrow if I want. How did you learn so much about TA? Man, I've been doing it forever. I've been involved with markets for a very long time. And then, obviously, you can learn a lot on YouTube. There's tons of like free content out there you can learn from. But mostly from reading books. I highly recommend that you read. It never occurred to me when I was younger. I hated reading. I always loved movies. But the truth is if someone takes, especially old books, people didn't used to get rich, doing art or writing books. They did it because they were passionate about it. So like old artists always died poor, and then now they're like famous, and now like their paintings are worth a ton of money or whatever, or they're like architecture or whatever. Most of them died poor. Architects not as much. Same with people who write books. You didn't used to get rich writing a book. You wrote it because you were passionate about it. It was, your art. It was you trying to get on the internet and make YouTube videos to share your knowledge with people, but before the internet and YouTube existed. So you wrote a book, and then you hoped somebody published it, and then you hoped somebody, got their hands on it and read it and learned something. So, that's what it's really all about. When somebody takes the time, to make a movie or write a book or, whatever the situation is, making videos on the internet, they're probably doing it not necessarily for financial gain. The financial usually comes like way later if you're good at it. The actual reason you do it is because you're passionate or you want to share with people or whatever. You want to share your knowledge, or maybe you don't have kids to teach it to, or maybe your kids don't give a shit about it. So, the truth is, most people that spend that much effort and time doing something are probably doing it for the benefit of like humanity more than the benefit of themselves. So in the same way, that you can learn from a teacher in school or whatever, they're probably teaching you to make money, but they probably enjoy teaching, which is why they became a teacher. But they're getting paid for it. But when someone writes a book, they're probably writing that book not to get rich necessarily. They're probably writing that book because they have important stuff to share with you. So if you go back and start looking at like Thomas Bulkowski's books, or, even like Warren Buffett, love him or hate him, Art of War, any of the famous technical analysis guys, like macro, micro, psychology, like Ray Dalio is great. Like I like his older stuff, even though his hedge fund is garbage now, does not mean that his books aren't amazing and that like his previous writings aren't amazing. Like, on a long enough time frame, everything goes to zero. So the guy can be the best hedge fund manager in the world and then totally shit the bed because he doesn't adapt. In the same way that like Warren Buffett's like, crypto's rat poisoning. Well, imagine if he would have got into crypto and then took that crypto money and then bought Berkshire Hathaway with it, how much Berkshire Hathaway he would have, or how much Apple he would have. So ignorance is bliss, yes, because he's still successful. But in the same way, like just because someone has outdated thoughts or views or whatever now doesn't mean that they don't know their shit and their book's not valuable. Yeah, I can put a list of like good books in the not comments, but in the description or whatever. I've actually been meaning to do that because people ask me all the time what books I should read. But I mean, it's easy if you just for me it's more about authors than the actual books, because typically if someone writes one good book, if somebody writes one good book, they probably have written more than one good book. Like I like Jim Rogers. If you go back now and you read Bull in China, he was saying exactly what was going to happen with China, basically like taking over the world, like economically, way before it ever happens. He talks about pandemics. He talks about economy. He talks about stock market. He talks about technology, innovation, investments. He nails everything in that book. I think it was like 2007 or something like that. And then if you go back to his one before that, Hot Commodities, that was like 2004. Absolutely phenomenal book. And he talks about the macro, but he also talks about the micro. But you read that book now, 16, 17 years later, and it's 100% still as relevant, only now it's credible. If you read it back then, you say, yeah, maybe this guy's right. If you looked at it 5 years later, you go, holy shit, he was right. If you look at it now, you can look back and say, let me pull up a chart on, sugar and see what it says now. And you're like, oh man, he nailed it. Let me pull up a chart on coffee. Let me pull up a chart on soybeans. Let me, whatever, gold. He absolutely nailed it. But it's the same book, same knowledge, but just more credible now. So, I recommend people read about moving averages, Fibonacci's, chart patterns. Like Thomas Bulkowski is awesome for like chart patterns and stuff. But to tell you the truth, technical analysis is like any skill. It's learned through practice. As where like psychological or like macro views of things, are easier to learn from a book. Because you can learn and get a principle from a book, but to actually get good at something, like you can read about how to throw a good punch in a book and be like, okay, I know how to throw a good punch now. But you don't just do it once and throw a good punch. No, you go in the gym and you punch 10,000 times, and then all of a sudden you've got one good punch. And then what do you do after that? I call it the utility belt. You go out and you learn something else and you add that next thing into your utility belt. And you might not use any of the things in your utility belt. You might use the same 3 things all the time. Like, what's Batman do? He uses like his grappling hook and, his little like throwing, whatever they're called, bat stars or whatever. Those are like the 2 main things he uses. But, after a while, he's got all these extra little things in there for when he needs them. You know what I mean? Like, I don't know what else Batman has. If you shoot like poison in his face, he's got the little antidote. If you, whatever. I don't know. I can't even think. But, it's essentially just having those tools ready when you need them. You have the compass. You have the map. You have the, whatever. You have extra rations, water, all that good stuff. And that's what's so important is to have those things when you need them. So when you run into like your regular stuff that you use isn't working or something's not quite right, you can use those other things to just gain a tiny little bit of an edge. All right, let me check out the comments again, then we're going to keep rolling. Strange thing about Dogecoin. Lots of companies are coming to accept payment. Well, the strange thing about crypto right now that happens every time at the top of a market cycle is, has anybody actually sent any Bitcoin lately? Ethereum? Anybody tried to use Uniswap lately? The fees are ridiculous. They're absolutely ridiculous. I mean, they're not sustainable. So is Bitcoin going to die because you can't use it for payments? No. Maybe it'll just be a store of value. Maybe Lightning Network will take over and, second layer solutions. But you send XRP or Doge or something like that, it's dirt cheap and fast. So the truth is that Bitcoin is number 1 in security and so far longevity, but it's not necessarily the most useful crypto. It has essentially become more of a store of value and less of a payment. And same way like Ethereum is extremely expensive to like send and not necessarily the best thing to do, but look how much junk is built on top of Ethereum. It's basically a platform now with a ton of stuff built on top of it. So now maybe it doesn't need to do all that other stuff. It doesn't need to be like cheap to send because people are using it for something else. Find a good author, read them all. Yeah, that's definitely good entry to long Bitcoin. If it closes above 52,580 on the 4 hour. I mean, I just went over that. Just roll back on the video a little bit. I literally just talked about, the entry and exit and what I'm looking for. There's literally a long and a short trade target on the screen right now. So I would say probably rewind and look at those. I mean, it's not financial advice. Like, I'm not your financial advisor. I'm not going to tell you what you should do or when you should buy or when you should sell, but I just explained exactly why this is a good area to take a long off of, and that's a good area to take a short off of. There's literally a risk reward on the screen explaining why and your profitability. So I typically don't buy breakouts. I position myself ahead of time for breakouts because I typically buy support and sell resistance. I don't buy once we break above resistance usually, because that's the best way to lose your money. Because look, if you said right here, oh, as soon as we break above this area, I'm going to buy because we broke out. So then what happens here? We break above that area, you buy. This is us breaking above the area, getting a candle close. This is you buying because we broke out. You buy, you and your buddies buy, everybody buys. And then this is me selling. Okay? And then we get down here, and then look, same thing on the downside. I'm gonna buy the key fib level. You're gonna sell if we break below that last low. So we break below the last low, you sell because we broke below it. So now we're going down lower. I buy because I'm buying support, and then this is me. That's you. That's why I don't buy breakouts, because they only happen once. When you oscillate in a range, you test support and resistance over and over and over and over, and then one time it breaks. It's the same as this chart pattern we drew right here, this channel. This channel right here, that's our top. Then we draw on the bottom right here. So we still have just 2 points, one on top, one on bottom. So then here we have this second top right here, close or wick, whatever you're going by. And then here on the bottom, we have a second bottom right here. So now we have essentially 2 points on each. So then we come down here. Now we have a third point. That's a reliable line. Then we have a third point here, 1, 2, 3. That's a reliable line. You could look at it either way. That's why I have it drawn two different ways. 1, 2, 3, and that's the fourth. Or 1, 2, 3, 1, 2, 3. So then from then on out, I will buy and sell accordingly. I will sell resistance, which works right here. I will buy support, which works right here. You know, doesn't quite get back up to resistance. Buy support, comes back, does not break below it by more than a couple pennies. So, you know, your key fib level right here. Sell resistance, fails to break out, and then it finally breaks out. So what do? You don't buy right into it right here and end up in this wick. You wait until it comes back down, retested it as support. So it breaks through the resistance here. I sell. It comes up, finds resistance here, comes back down and finds support. So now again, I'm selling resistance and I'm buying support. So what did I do? I missed out on this little up and this little down, ended up back in the same trade, in the same position with much less risk. Same thing again. Come back up. I sell resistance here. It moves up. I miss out on this little bit right there, but then it comes back down and I could either buy support here, or when it actually touches support, I buy right here. So what happened again? Instead of buying here and being upside down, well, getting a little upside and then being upside down all through this, now I'm waited patiently. And again, I sold resistance and I bought support. So when I sold out right here and then I rebought right here, I bought the same amount lower and I missed out on all the downside risk and all the scary being upside down in a position, got a better entry, and then got the good stuff. And then same thing with the fib levels. You know, if I sell a key resistance fib level and then it breaks above it, yeah, that's fine. I miss out on a little bit of the upside potential. But if it comes back down and retests it and it holds, then I can just get back into the same trade at basically the same area, but without all that risk potential of it just getting rejected and selling off here. So me personally, I don't like to buy breakouts. I don't like that. I would much rather buy support and sell resistance. Because look, there's a reason a support and a resistance hold. It's because people are either accumulating or distributing. They're either buying a bunch before price goes up and holding it there so that they can get a good entry, or they're selling a bunch before price goes down and holding it there so they can get a good exit. So I don't want to be the guy who guesses. I would rather take these two trades, just like we talked about. If this is our range that we're paying attention to, because this is a low, this is a low, so then our next low we would assume is going to be higher. So that's the area we want to buy off of, is 48,600. And then if we assume that that was our low, then our high was at the 0.5, our next high was at the 0.618, so our next high is going to be at the 786. I want to sell the 786 and I want to buy the 382. So this is me buying the 382 and the potential move to the 786. This is me selling the 786 and the potential move back to the 382. And then until we break out of this range, that's the trading range. And then when we break out to the downside, if we take out this right here, I'll start to get scared. If we take out this right here, I will definitely think we're still in a downtrend. And that was our A, B, C. And if we break out to the upside above the 886 and I get stopped out on my short, then I will assume that we're going to take out the all-time high and we'll continue to the upside. But am I going to just buy the breakout of the all-time high? No, probably not. I will wait for it to break out and then come back down and retest it as support, and then I will buy. Because it takes so much of the risk off the table and you don't end up in a position like this where you get stopped out of your trade, or you buy this dude who bought right here. This is a throw over. That's our high. They push the price all the way back up, slightly higher. Somebody bought or got their stop loss got hit right here, and then price just drops off a cliff. The same thing happened right here. Somebody took a long right here and says, if it takes out this low right here, I'm going to get out of my position. So it takes out that low. They sell their position right here, and then it goes back to the upside. So they literally, this guy sold the absolute top, or bought the absolute top, and this guy sold the absolute bottom. And that's what a throwover is. You take the price to the previous resistance or support area, and then you throw it as hard as you can up and use those stop losses, and then it fuels it to the downside. And the same way here, you push it down just slightly lower than that previous low, and then it fuels the move to the upside. Because all those people who just got stopped out of their position now have to re-enter their position at a worse price, and they've already taken a loss from the stop loss. Yeah, for sure, James. Definitely. Fib retracement is so important. Yeah, Fib is huge. I mean, Fib extensions are extremely important too. A lot of people don't use Fibonacci extensions, but I mean, they're absolutely phenomenal. All right, so let's look at the Doge real quick here. So Doge is looking okay. You know, basically got rejected off that top point twice, came down here. The 821 has been looking across to the downside. It's basically trying to save it. It's slightly crossed right here. The 8 crossed below. It's crossed slightly back above it. It's trying to push back up. But, you know, this is just a bunch of people that are, I imagine most of these people are in profit right now. But I know a lot of people, like, bought at extremely high ranges right there. So if you bought at 8 cents, like, old girl, like, tweeting about it, I can't remember who it was. It was like Mia Khalifa. Yeah. She's like, bought Doge at 8 cents. And I was like, you need a life coach because all you do is make bad decisions. So, you know, 5 cents is where we've been like consolidating in right here. So a bunch of people are already upside down, like, you know, basically like 40% in their position. But a bunch of other people are up like hundreds and hundreds of percent. But there's no real, Doge is not going to be the most bullish thing unless it's like trending, because it has no like actual purpose. But, you know, realistically, you know, you can still pay attention to like some of these Fibonacci levels or whatever. We sold off from the all-time high here, came back down to the 236, and that's been our basic like flat line bottom. So, you know, realistically, could you get bullish on this thing if it takes out 59 cents? Yeah, maybe, but I'd be real worried about this resistance, you know, support turn resistance right here. You know, you really can't get bullish on Doge until it either touches a key moving average, unless you already bought the fib, or you buy the next fib, or it breaks out to an all-time high. That's my opinion. You know, but you see where I have these boxes here. That's where I would enter on a Doge position. That's the second entry on a Doge position. That's the absolute best entry you could get. Well, unless it just dies. All right, so let's go over to ETH. Ethereum on the daily. Let's check it out. We had that key resistance right here. And then this is my exact point too, James, if you're still in there. This resistance right here that we were trying to break above, trying to break it, boom, get the measure move up. Exactly. That was our measure move of this triangle right here. Got the measure move exactly to a T. Boom. Don't even close like above the measure move. And then what do? We sell back off to the breakout point. Find support at the breakout point. This is where you re-long. This is where you take your long at. 1400. Instead of buying the breakout right here, you wait until it proves that it's support. And then you take that same entry, possibly even lower off one of these moving averages. And, that's how I trade. And in my opinion, yeah, sometimes you miss out on a breakout, but I don't know what the actual stat is, but like 75% or more of the time it breaks out, comes back down, and then either fails or finds support. But I would rather take that because the risk is so much less. But, you could buy into strength as soon as we get the confirmed close above the previous highs. And, you'd be sitting pretty, obviously. But again, it's just riskier. And like for me, I would rather just wait for like perfect trades than just, I don't care what I'm trading, I'd rather just wait for perfect trades than like jump into like a FOMO trade or trade a moving average cross or something like that. Like here we're getting the 8 and 21 or cross into the upside. If it comes back down here and retests at 1627, that's a pretty good place to take a buy because it's a pivot in the market. Because one of two things is going to happen. This is either going to come back down here and find support in this range and then continue to the upside, and the 821 cross was valid, or it's going to come down here, it's going to break down from it, reject this 821 cross, and then you get taken out of your long, and then you barely had any stop loss in place because we're so close to the actual pivot in the market. And then boom, sells back off, and then we see what happens after that. Do we put in a new low? Do we put in a higher low? We've obviously got like a couple patterns starting to build on the Ethereum chart. So, all right, let's check out. I'm still this is gonna end up being a long stream, but Uniswap, talked about this way back when. Anybody that took this trade with me, like, this was obviously a great trade. I believe the majority of my position was in here. It was like between $4 and $5. Another perfect example. We crossed the 821 to the upside right here. Kind of like chop still, but we're above. On this time frame, I only have like up to the 50 moving average. Once we're back above it though and get that move, you can buy a little bit on the breakout right here. We get that higher close or same close right here. Potential rejection. But when we come back down and find support at a higher level right here, there's no reason not to be long in this thing off $5. No reason. Because we're now literally finding support on our previous breakout point in an 8 and 21 cross uptrend. We have the blue slope line positive to the upside. That's more than enough for me. And then if you're scalping in here on shorter time frames, that's fine. But in all reality, this thing is making higher highs still on the daily. So, Bitcoin is essentially consolidating, not making that higher high. This thing has already shot back up and taken out its high. It did right here basically. And then you would assume it would get the measure move of this triangle or like the flagpole, which would put it slightly higher than it's at now. So $40 could be in the cards for this one. Definitely potential there. Fib extensions are good for making all-time highs. Basically take that previous top and then go to the relevant bottom. So we have the top right there and then down to the bottom. And then what it's going to do is obviously once you take out that high, you're above it, come back down, retest it. Now you've found support on the previous resistance. So you can use that as a buy. And then you can look for what your next target would be. 1.618 is up here at $47.75. So, all things considered, that's your next target, 47.58. And if we get up to the 2.618, 2.618 is at $86. So, I mean, this thing could get running real quick. I mean, it has been running. It was like $5 to, $34. So, but again, the fees are just ridiculous right now. It's pretty much unusable. So let's look at DOT now. This was like the exact same chart. People were looking for stuff that hadn't broken out yet, or stuff that was looking like it was going to break out. And these were the two main ones I called out. And I think Tezos also. Same exact thing. 821 cross right here. Consolidate. As soon as we break out and put in the new high off of this, that's what you're looking for. Either an entry off that or the retest of the breakdown. But, as soon as you start putting in like a wick like this, finding support, man, I'd have to go back and look at what our entry was on DOT. I think it was like 750. I believe it was up here. But we bought it 750 right here and then bought more when it came back down to like 820 or something like that. And then got the measure move breakout, consolidation. It was starting to look a little bearish right here. But again, 8 and 21 still in an uptrend. This is looking a lot more like Bitcoin right here, though. This looks like Bitcoin. We're potentially getting that 821 cross to the downside on the daily. Hasn't happened yet, but each bounce is getting weaker. It's looking weaker and weaker. And then usually what happens is the bottom falls out. So this thing looks like it's potentially coming down to like 26, 22. Could easily still go to the upside, though. But this looks much, much worse. But we are about to get the cross 821 to the upside, but we don't have positive slope. So again, this one looks much worse. Chainlink, same thing. 821 cross back here, came back down, found support, got like a capitulation move back here. Started looking a little sketch. That was definitely a little sketchy right there. But again, got bought up like pretty bullishly and then never closed again below that sell-off. So you could wait this out right here until it got back above it and we got the 821 cross again. But again, it pushes up, comes back down, retests it. You could take the buy off of the previous breakout. But even if you waited until we got like confirmed closes above this area, like 15, or even if you entered back up to 21 at 18, it's still over doubled since then. And then when it came back down again, it's consistently putting in higher lows. You got like a low in this area, low in this area, low in this area, low in this area. So it still looks good, but this is more like DOT. It hasn't taken out the high since this. The 8 and 21 are dangerously close to cross into the downside. You did just get the hard buy. You have multiple green histograms in a row, but you're still below the slope and it's red. So this one looks less bullish, but again, it's a pivot point in the market. Pivot points are the best place to take a trade. If you take a long off a pivot point, there's less danger to the downside before you're wrong. The same way if you take a short off a pivot point, there's less danger to the upside before you're wrong. So you have to risk less to gain more. Because if we break down from this, it's going to be a violent break. If we break up from this, it's going to be a violent break. But this to me is like a no trade zone. Because all these things could look however they want. And they're easy to get pushed around because they're lower market cap. But these are all going to do what Bitcoin does. Ethereum, all these things, Doge, Bitcoin, they're all going to do the same thing. They might do whatever in the meantime, but when Big Daddy Bitcoin says it's time to go up again, these will go up again, most likely. And when Big Daddy Bitcoin says enough is enough, let's wreck Michael Saylor, they're going to go down. And everything else is going to go down too, and probably worse. So BNB is next. This is one of the best cryptos overall. It's got a long time frame. It has a functional use. You get discount on Binance. They regularly burn it. It crossed above the 200 way back here and was in an uptrend. And even if you didn't get in then, you could rebuy when it came down to the 200. Perfect entry point. The 8 and 21 chopped around a little bit, but you were just steady in an uptrend. So even if you waited to get your buys in at $35, which we specifically talked about this around that area, I think we hit the target perfectly at like 35. And then we're expecting essentially a sell-off, but we're putting in higher lows. And then I think the last time I looked at it, we came down and touched 35. And after that, I said it's game on. Did I think it was going to go up to $340? No, I did not think that. Am I surprised though? No, it's a blue sky breakout. There's no reason it's not going to go to $1,000 eventually. I definitely wasn't expecting it to happen that fast. But again, you could, you can do the same thing again. You can do fib extensions from the top, assuming this was the end of the sell-off and it's just going to keep going to the upside. You can get your fib extension target, and next target on this thing is $530, then $1,000. Is that realistic? I mean, it's about as realistic as $340. It just hasn't happened yet. So sometimes it seems a little unrealistic, but it's still above the 8. Hasn't even come close to the cross to the downside. It's consolidating and getting strong bounces off the 21. It's consistently like putting in higher lows. So if we find support here and we take this out, your next main resistance is at $300, and then blue sky breakout above 333. If we come down here and we take out $208, then it's going to be a hell of a ride. 156, 170, somewhere around there. But again, this has been one of the most bullish cryptos. But this, to me, looks good because this is what we call a bullish reset. You top out, and then price action basically just goes sideways. Has a little sell-off, but it's basically going sideways while the indicator oscillator goes down. So it's basically just resetting this, and then when it goes back to the upside, it has room to put in another massive move like this. But what you have to worry about is this putting in a descending triangle? Is this just a high, a lower high, a lower high, and then like basically like a flat bottom support? Because if it sells off from there, you take from the top of the triangle, to basically the bottom of the triangle from the break. And if it breaks down from there, it's going to break down to the 200 moving average is the measured move, which is $85. So is $85 realistic? I would say it's as realistic as 1,000, just in the opposite direction, So let's see, BNB. I think that was it for the cryptos I was going to look at today. I'm going to go back over to, I got gold, silver, uranium, First Majestic, which is a silver mining company, and then Tilray. And then I think I'll probably call it there. Well, I'll probably hit chat again and then call it there. Let me take a quick look over, see what's going on. Super helpful. Hey, thanks, brother. Appreciate it. Need another Musk tweet? Yeah, right. I think he might have blew his load on those tweets. Have you noticed, though, that Elon and Michael Saylor have been real quiet lately? I think their lawyers are like, hey, maybe you should cool it before you go to jail. I have a feeling the SEC is going to nail a bunch of people. And the funny thing about the SEC is they don't even have to be right. They'll waste your money on lawyer bills, or most people end up just paying a fine or a fee or a settlement. So look at gold, all-time high. Been selling off inside this channel. Everyone's familiar with the channel. I've been talking about this forever. I know everybody's been mad at me the whole time. All the gold bugs hate me because, well, they hated my TA, and now they hate me because I'm right, but they wish they would have listened. So we got the capitulation out of that move. We got the fake out breakout right here, which I even talked about. This is a perfect example of a throwover. James, if you're still around. We break out. People buy this breakout. We get stopped at that previous all-time high and then dumps back down, and we never put in another high again. So whoever bought this breakout right here is absolutely wrecked now, because they bought between 1900 and 1950, and now price is at 1700. So they literally bought the top of that push up on a fake breakout. The same way that the guy who sold the breakdown at any one of these points, got wrecked too. But this is just a worse example, and that's literally a throwover. You walk out to the edge of the cliff, throw the ball as high as you can, and then use the momentum of it going down to get even lower. So this is a clear downtrend in an overall bullish uptrend. But we're now at the bottom of that channel. We hit our measured move of the triangle perfectly. We were looking at this triangle before. Potential move to the upside, potential move to the downside. Hit the measured move. We're at the bottom of the channel. I told everybody back here what was going to happen. We were going to break down from the support. If we broke this level right here at 1793, we were going to come back down to that support, come back up and try to retest it as resistance. It retests. We get resistance where We previously had support. Game over. Come back down, sold straight through it. Since then, that was at 1,800 bucks. We're already down 100 bucks. They said $1,700 gold would never happen again. Blah, blah, blah. It's not about fundamentals. It's about technicals. So here we are at the bottom of the channel. Where's the best place to buy? Support, 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 support. Where's the best place to sell? Resistance, 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 resistance. Now, granted, you don't have this point and this point to start with. But as soon as you have two of those points, you're in a pretty good spot. And same with the heart line. You can pivot is the heart line, basically the center. Come down, find support on the heart line. That's good. Support on the heart line. That's good. That's a good place to close your short or enter a long. Support on the heart line. And then when you break down through it. So now if you take a long down in this area at 1,700, you want to get out at the heart line. Basically sit back at 1,750. And now you got to worry about this thing coming in here. So I don't think this is done bottoming. Could it be done bottoming? It's possible. But we just broke down from a key fib level. So my entries on gold, we went from the bottom back here at $1,046. When we broke above 1,300 right here, that was my bull call. That was when I said, this is it. Gold is on. Went up to 2,100. It was a key fib level. Exited our position once we took out like longer highs in here. I don't sell my physical gold, but it's very clear, obviously, that we're now in a downtrend. Once we got back down to the 236, that's basically confirming that this Fibonacci is relevant. So now that we've broken down from the 236 convincingly, our next target is the 382. So next target is 1,600. That's when I'll be really looking for longs, like bullishly on gold. I'll pay attention at 1,600. I'll really pay attention at 1,500, and I will go hard at 1,366 to 1,400, because that's basically a breakout of we were in like some form of a triangle was forming this whole time. And then this was our resistance, our key resistance right here. So if you're looking at this as basically our support through here, this support, 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 support. This is our resistance, 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 resistance. That's why I got real bullish on gold after the breakout consolidation. But this move has played out. You could have thought it played out right here or whatever. That was pretty violent sell-off. But that looked like to me what was going to happen is we were going to come back down and retest this. But it looked super bullish when we came back down and didn't even get below that last resistance. So, it looked very strong. And it looked very strong right up until it didn't. But if we come all the way back down to the green box, that's basically the retest of that long trending resistance. Do I think we'll get there? It's not likely. But I'm going to start laddering in like nice at the 382, the 0.5, and the 618, because those are the most common, retracement areas. So, and again, we'll pay attention to what's going on like in the meantime, because right now gold looks like real bad to me. We're on the daily, and this is the difference between the bull market, bear market. We got above the 200 exponential and simple, the two blue lines right here, came back down, retested them. That was at like 1,300 right before the breakout. And then look at the slope on the 200 exponential and simple. Blue and up the whole way. Now look at right here. The 200 simple in dark blue right here is now flat, slightly going to the downside. And the 200 exponential, the bright blue right here, is definitely pointing to the downside. So as long as we are underneath the 200 exponential and the 200 simple and the slope is to the downside, that's super bearish to me. That looks terrible. That's basically bear market status. I mean, regardless of if you go by percentage. It's just it's just shy technically of a bear market, but when we break down from it, come back up, test it as resistance and failed right here, that's when you should be getting, my opinion, be getting extremely bearish on gold. And then you'll see on the daily, 821 cross to the downside here 821 cross to the downside here. You know, either one of those would have been a good exit. This was chopped through here, and there was like, you know, this looks suspiciously the same as this. That was obviously a throw over fake out. And a lot of people probably got screwed off that, but it is what it is. But, you know, this looks bad still. And if we break down from, you know, 377 obviously is already in jeopardy. Come back up, retest it, break back down. 528, 1662. Basically back down at the bottom of the channel. So I'm not ready to get overly bullish on this thing. I want to see at least an 821 cross and like some kind of strength out of this thing. All right, silver. Silver is technically more bullish, but not looking great here. You know, it's the same channel we've been operating in, and I've been talking about forever. I talked about it before it even happened, actually. This is our trading range. That's silver in a nutshell. This is the trading range. Selling resistance, buying support. Selling resistance, buying support. So as soon as we broke down from here, as soon as we failed, the silver squeeze failed, looked like crap. Sold back off. We had 2 descending triangles. Broke out of 1. Did not immediately get the move. Come back down, retest it as support. I'm going to get rid of this. Retested it as support. Got the move up. Finish off the measured move. Try to break out of this one. That was the failed silver squeeze. Come back down. And then we just waterfalled right over top of it. Sort of like what Bitcoin's doing right now. So sold back down to the heart line, below the heart line. Retested the heart line at 25.50. That's what just happened. Looks like more downside. It looks like next target is going to be 24.15. Our measured move, if we broke down from this ascending support right here, that blue support right there, our measured move is this red arrow. It's 22.97, which is also the bottom of the channel, the trading range. So high 22s are looking like silver's next target. And maybe that'll bring the premiums down some, because as long as the premiums are expensive like this, only idiots are buying. Because if silver's at $25 and you're paying a $10 premium, silver has to go to $35 before you break even. So it has to break out of the trading range. So you might as well just wait until it breaks out and then buy, because if it breaks out, it's probably going to like $50. So it doesn't make any sense for people to be buying with these premiums. Silver is like a fad. It's popular for a little while and then everybody forgets about it. So everybody's starting to forget about it already. Wait till nobody's paying attention to it, and then you can get an interest in silver. If we break down from this trading range, my main silver target is like 1650. That corresponds with gold basically just getting wrecked like we were talking about. But again, if we take our fib target from, and this is a tough one because the Fibonacci target of $12 is unrealistic, because that's full on paper trading BS like stop hunts. You know, you could probably realistically fib from like 1650 and it's more realistic. This is crazy, but it's still being respected. So if you go from the bottom to the top, but you weren't going to buy, you can't buy silver for $12. When this was happening, silver was $25. Like if you went to try to buy it somewhere online or in person, even though it was $12 paper trading. But when the premiums are different between spot and regular, you buy digital, and then once it comes back up and price and premiums start to like coincide again and the differential is not as much, then you sell the digital and go buy physical. So yeah, you still pay a little over spot, but spot was like, it was like silver was trading for like $3 to $5 over spot through this range. Silver was trading at double spot here. It was $12 here and you were buying it for $25. It was, you know, $18 here and you were buying it for $21. It was $30 here and the premiums were like $2 and $3. And then all of a sudden in this range, when it doesn't look, it's still putting in lower highs and inside of a channel. Now all of a sudden there's no more silver left and the premiums are at all-time highs, the same that they were at down here while we're going sideways and gold's going down. Yeah, no thank you. All out of silver, last chance. It's going to be unaffordum and unobtainium. Yeah, okay. That's what you say at the top. You can buy my silver. Idiots. So we break down from here. It's coming back down to like high 22s, low 23s. But, you know, we already came down past the 236. Next target would be the 382 if we break down here and come to a like key fib level, which is 2090. And you'll see, too, that what I have right here is the fib extension in red from that previous peak to that bottom right there. And you see our fib extension targets. The 1.618 was right here. The 1.618 was $27. So we overshot that slightly. But, you know, that was a great target. If you bought anywhere in this range and then it went up to $26, you crushed it. And then, you know, from there, if it breaks back down and retests that previous high, where's that at? 20 bucks. So that's sort of like our descending channel right here. And also like, you know, key fib level, key resistance, turn support. Could we get all the way down to the 618? Could we see silver back down at 1675? Maybe. I don't think it's likely though. But, you know, we're starting to lose this trend. And, you know, it's been overly more bullish than gold is. It's still above the 200 exponential and simple. But, you know, it's also more of a commodity. Like, because it has so many industrial purposes and everything. But we just got the 821 cross. We're getting rejected. You know, it's very likely we're hitting $24 very soon. You know, after that, come back down, test the bottom of the channel. Looks very likely. Real quick, though, in case you think I'm like too bearish on silver, this should make you real happy. This is the monthly silver chart. This is the pattern we were in. When we broke out of this pattern right here, this descending channel, is when I started buying silver heavy. So my silver was purchased between like basically 12 and 20 bucks. My average price was like $14.50 to $15. I was buying Eagles for like $17 a piece back then. That was the spot. And look what happened. We broke out of the channel, came up and came back down and retested it. We retested the top of the channel. That's the absolute best buys. The retest of the previous resistance turn support. It happens all the time in markets. But this is what really you should be paying attention to if you like silver. All-time high in 79.80 right there. That's 1980. Retest double top high 2011. So 1980, 2011, you know, 30 years apart. Okay? And then if you're familiar with chart patterns, this is a cup. The handle is a descending channel. And then when you break out of the channel, the measured move initially is this one right here, which took us up to $24. And then eventually you curve back up and put in a smaller version of the same pattern, a smaller cup. So it starts as a channel, descending channel, retracement. Cannot take up like more than half the cup. Ideally, shouldn't take up more than half the cup, which realistically, that was our support here. 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 Just a wick was that capitulation paper wick. But really, that held as our support perfectly at like the mid-range of the channel. And then we're putting in a smaller cup now. You know, we're consolidating, obviously, temporarily right here. But if this curves back up and comes back to the top right there and puts in a triple top, that's going to look like the biggest cup and handle pattern like in all of existence. And if that happens, you can't tell because it's percentages. But this is our pattern. It's from the bottom of the cup to the top of the cup. And it looks tiny because when you move it, it's percentages instead of dollars because it's in log scale. But that move from the bottom of the cup to the top of the cup takes us up here to like $90, $95 silver. Is that realistic? Yeah, I really think it is. If we break out of a 31-year, you know, top to top, but in all reality, a 1980 to, you know, 2020, 40-year plus pattern. I mean, it's not unrealistic to think it just quickly like doubles or from where it's at right now, quadruples. Or at least from like that $30 top, like triples, you know, back here. So, but in all reality, the 1.618 would be our target at $121, triple digit silver. And then after that, 2.618, $525. Does that sound crazy right now? Yeah, but also if currency fails in general, like dollars, euros, pounds, yen, if they all hyperinflate and the system crashes, is $524 the same as $100 now or $50 now? Because it's relative to dollars. Yes, I think so. So I don't think it would be that unrealistic, because I think gold would also move up, and you'd be looking more at your target between, the relationship between gold and silver to each other, the gold-silver ratio. Because that would essentially just be like a massive, like hyperinflationary, like, environment. So maybe like a loaf of bread is $1 now. Maybe a loaf of bread is $50. So if silver is $25 now, $250 silver is not that unrealistic, because it's only went up 10x. So, you have to look at it like relative terms too. Are you comparing it to dollar, or are you comparing it to gold or other commodities or whatever? So uranium next. I'm going to check chat real quick. They should be in jail already. Elon Musk is not going to jail. He'll get in a rocket ship and fly away first. Which, by the way, if you saw that last rocket, that thing was awesome. I can't believe that it landed. Not sure why it exploded afterwards, but before I saw that video, I was talking to my buddy, and I was like, it'd be real funny if Elon Musk just ran out there with a rocket launcher and blew it up. And then he was like, dude, it did blow up. And I'm like, what? I'm like, did you see Elon run out with the rocket launcher? He's like, I don't know what you're talking about. So uranium, same thing. Uranium has been in a downtrend, topped out back here in, and this is the ETF for uranium. Somebody was asking about it. URA is the ticker symbol for it. Global X Fund uranium ETF. 2011, it topped out roughly. Uranium did. Fib from the top to the bottom. The 236 was at $13.85. We're currently at like $17. The 382 is back here at $21. The 0.5 retracement, even if it went back into a downtrend, $30. So this thing has massive potential. And then also, let's pay attention to the trend. What changed right here? I know you guys know already. What changed right here? We got above, this is on a weekly scale. We got above the 200 exponential, and now it has a positive slope. We got above the 200 simple, and now it has a positive slope. This thing just entered a bull market for the first time since 2011. So, 9-year bear market and a 9-year bear market and 95% sell-off. So I would say there's probably some long-term value in uranium ETFs. And if you're not familiar with uranium, obviously it powers nuclear power plants. And if you're not a fan of nuclear power plants, you should read up on them, because they're actually amazing. And the technology since like Fukushima and all these other like spills and bad things are all drastically improved. And it takes forever to build a nuclear power plant. And there's like 21 being built right now. It's $50 is like the basically like cheapest price that it's worth selling uranium at. So there's a very high likelihood in the next couple of years that with this green energy, and uranium is extremely green energy wise. People don't realize it, but it's zero carbon emissions. So it's huge. And the risk of, high pressure explosions is negated now because they don't use water anymore. Well, the newer plants don't. Cuts down on the waste. There's tons of fundamental and technical things. This is technical and says uranium, yes, please. Not right this second, because we're at a key resistance. Could easily sell back off, retouch at 200. At least come back down to 1650 or whatever. It's already had a massive run up here. But from $17 to $130, it's a pretty nice move. Let alone if it takes out the previous all-time high. Yeah, this big boy stuff right here. This close to entering into a bull trend, it's not always amazing. The best place to enter was back around here, $15 or whatever. But even if it sells back off, the risk reward right now is absolutely phenomenal. I mean, you literally can't beat. can't use this tool right here. All right. So yeah, I mean, if you took a buy, let's say, off this area right here, you got a 51% downside all the way back down to the bottom. So just if we get back to the 618 is 151%. So it's a 3 to 1% with a 50% risk to the downside. So if you're assuming that the 200 exponential or simple will save you up 28% potential down, 151% potential up, you could even be skeptical. It's still a 3 to 1. I mean, and that's assuming a massive stop loss or potential drawdown, which, if this thing is in a bull market, entered a bull market for the first time in a decade, and fundamentally is probably the future of clean energy, green energy, any energy, this is a long game play. Not the type of thing where you're just throwing in a stop loss, more like you're just laddering in like over time. Because, this is a commodity bull market that's going to be 10, 15, 25, 50 years long. It takes forever to mine uranium. It takes forever to build a mine for uranium. It takes forever to get permits for a mine for uranium. It takes forever to build nuclear power plants. So, this thing doesn't just like start up and stop like overnight. It's not just like one big wick to the upside and then it's done. This is a long play. This is that long game. So I'm very bullish on uranium long term. But again, showing some weakness right here. Could easily get a drawdown back to this previous high, sell off, back to the 236. But what's the difference if you got in at $13 or $17 if it goes to 150? I mean, First Majestic. This actually looks a lot like the Tesla chart to me. And if you're not familiar, it's AG, and it's a silver mining company. I think one of the better ones. If you said that was the one, up, 2 down, retracement at support. 3 was that crazy like silver squeeze. 4 back down, looking to take longs again, back in that like 1398 range. And then if we zoom way out here, this is what makes me extremely bullish on this thing. We have a triangle, bottom, top, 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 bottom, 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 top. And if depending on what time frame you look at this on, like a longer time frame, it looks a little cleaner. Top, bottom, top right here, bottom right here. We have basically broken out of this triangle. That was our 1, our 2 breakout, our 3, our 4 would be the retest of the breakout. This is our resistance, flip support when we come back down and retest it. So, I'm already taking positions in this off of that retest. But in all reality, the measured move of the triangle, again, it looks very small, but the measured move of the triangle takes us back up slightly above the all-time high previously. That's $36. So that's over a 2x from where we're at right now. And then the 5, if the 4 came back down and retested the 1 or around that breakout area, you get in about like $14 or something like that. And then it takes us back up just to that 5 measured move. That would be like $36. And then this would look more realistically like the first 1, 2, 3, 4, 5 of the longer pattern. So this would essentially look like, we're going to potentially get the Fibonacci extension from like our previous high to our low right here. And then we can start looking at our fib extension targets, which the 1.618 is up here at $47. So that's a 3x. And the 2.618 is up here at $200. And these things go parabolic compared to like gold and silver. So, if that would be like a $50 silver, this thing goes to like $230 or something like that. So, pay attention to it again. This could go bad here and break back down inside the channel and it fails to find support. But, that's what we're paying attention to. Definitely some serious potential in these mining stocks. And then if you start looking at fundamentals and not just technicals, silver and gold, like fundamentally are very, very strong right now. The same way crypto was like lagging forever and then finally just took off, I would expect silver and gold to do the same thing. They're just obviously like suppressed because 1, central banks buy gold, and 2, people need actual silver for like useful things. Like it's much more useful than something like crypto is. Most cryptos are useless or used for very few things. Silver is in like everything. And again, green energy, silver is good. And speaking of green, green energy, we got Tilray. In my opinion, the strongest of the pot stocks. This is another one that, you know, topped out back here in 2018 before the capitulation move. These pot stocks topped out ahead of time. 303 was the high. The low was 243. Sold off like 90 something percent. But look back here. Once we broke above the 200 simple positive slope to the upside, you know, that was at $10. That last crazy move up here was like up over $60. That was a 6x already. We're coming back down. We crossed 8 and 21 to the downside. So all we're doing now is just retracing this past little move up here. So, you know, where are we going to come back down to? Excuse me one sec. Where are we going to come back down to? Well, based on fib retracements, if that was our 1, here's our 2. That was our 3. Here's our 4. The 4 can't come down lower than the 1 by more than a wick on a long time frame. You know, potentially looking at also the fib from the bottom to the top, or from the swing right here to the top. This previous one came down to the 618. This one goes up to here, comes down to the 618, or the 0.5 of the macro. They both line up perfectly at 1236, which is the previous high from the 1. So anywhere in this green box range, you know, $12.50 to $17 looks real good to me. You know, we basically already came down to 1783. So we're already getting very close to, you know, what I would consider to be great areas to buy. We're in the bearish control zone, potentially leveling off right here. You know, we're well below. We've had a very powerful sell-off from that top red. So I'm not ready to just jump straight into this thing, but it's starting to look juicy here in the very near future, especially if it continues to sell off. And again, you know, call it what you want to call it, but, you know, pot is technically a commodity. You know, whether it's medicinal or recreational or whatever, you know, it's going to move in long-term trends the same way that like sugar or soy or coffee is going to move. So but yeah, I mean, this thing's got some serious potential. If again, you know, it's another one of those charts that just looks absolutely crazy when you look at it. But, you know, previous high was at $300. So if you're getting in at $15, that's a 20x to the last all-time high. And if you use fib extension from here to here, if you use a fib extension from this, see here, I'll show you this. I'm not 100% sure, but I think I've fib extension this before. Yeah, okay, look. 2.618 exactly this came up to of that previous move. The 2.618 exactly. Remember that. So if we do the fib extension from this high and we get, let's say we get down here to 13. We might not get that low, but let's say we do. The 1.618 is going to be $187. Okay, so from where we're at right now, over a 10x, $187. And then if we take out the all-time high, which is going to be at 300, that's a 20x. And then if we make it to the 2.618, and which also coincidentally is the 1.236 of the all-time fib extension, top to bottom, 300 to 3, that's going to line up perfectly with our number 5 target of $922. Sounds crazy. I don't know what a dollar is going to be worth when we get to $922, but I know from $21 or from $15 to $900 is probably enough to just make anyone here like multimillionaire. So, but yeah, I mean, Tilray, a lot of the other pot stocks look the same. Maybe this fails and goes to zero, and they find out pot gives you cancer and it's illegal, but probably not. So, probably one of the most powerful charts. You know, this thing, Tesla, uranium, you know, silver, some of these things just have some massive potential, and the charts are like clockwork. I mean, what's the likelihood of these perfect fib extensions, perfect fib retracements, retesting support as resistance? You know, this thing was in a bear market since back here, and now it's in a bull market again. You know, from its previous, you know, the chart data doesn't go back far enough, but from its previous time, I mean, this is a multi-year bull market we're talking about entering with these pot stocks. So, you know, and then assumably, like, the U.S. would legalize it, and then at some point in time there would be, you know, publicly traded American pot stock companies. So maybe one of them dethrones it. Maybe Tilray goes bankrupt. Maybe some, you know, anything could happen in the meantime. But, you know, technically looking at this thing, you know, and then this was the 8 and 21 cross to the upside on the weekly. This was the 8 and 21 cross to the downside. Here, I'll switch it over real quick. And then I think I'm going to wrap it after this. Well, I'll check out chat for a minute and then I'll wrap it. That was 8 and 21 cross to the downside. If you got out here, you got out at $85. This was the 8 and 21 cross to the upside. If you got in here, you got in at $7. So if you got out at $85 and you owned one, you got back in at $7.50. You know, you were able to over 10x the size of your position here. And then, you know, presumably it goes to new all-time highs. Sure looks pretty to me. But now we're in a downtrend on the weekly. We got the hard sell. We got the cross. So we need to pay attention to when we come back down to 21, does it act as support? But we already crossed 8 and 21 to the downside on the daily. So we need to pay attention to that and see where does this thing bottom out. Does it bottom out at the 200? 200 simple. Definitely some potential here for some excellent entries. And, you know, I know everybody wants to look at stuff that's making all-time highs, and that's great. But we buy that stuff when it's at the bottom entering into a bull market. And then we pay attention to the stuff that's been slept on. Most of these assets we just looked at recently are the ones that no one's in yet. They've barely just entered a bull market. So I want to buy the stuff that's just entering a bull market because you're buying it when it's cheap. The same way we were buying Bitcoin when it entered a bull market or down at its lows. You know, I bought a bunch of Bitcoin at $4,000. I bought a bunch of Ethereum at $85. I bought a bunch more Bitcoin at $10,000. I didn't think it was going to go up. I thought we were going to sell back off and go down. But, you know, I go by technicals. And the technicals said we're above the 200 moving average. We're in an uptrend. So as long as we have a positive slope to the upside and we're moving on up, there it is. And now here we are. So do I want to buy Bitcoin now at $50,000? Not really. Do I want to buy, you know, Tilray when it's at $300 or $900? Not really. Buy it now when it's cheap and then wait. So yeah, I think that's going to wrap it. I think that's going to do it. I'm going to hit up chat and see what anybody's got to say and then call it there. Hope you guys enjoyed the live stream. The first of many. Looks like Sundays are definitely potential. People seemed interested in Sundays. That's ideal for me. Maybe after that we'll do like every Sunday and Wednesday if it starts to jump off. See, you know, share them, like, subscribe, all that good stuff. Hopefully get some new subscribers. You know, these videos are going to be long, but packed with info. So I'm going to check out chat here. Maybe being married to is crazy. It's worse than jail. Yeah, maybe. I don't know. I think he's probably just as crazy, though, just in a different way. From the close-up pictures, the rocket ship only landed on 3 legs instead of 6, but still landed. Yeah, I don't know. I didn't see, like, super close-up pictures. To tell you the truth, like, the video I saw on SpaceX cut out before the actual explosion. It was, like, the whole takeoff, the whole landing, and then it cut out. And I was like, that's awesome. And then I was like, it'd be funny. I saw this Joe Rogan where Elon Musk came out and was like, those things are supposed to explode, so it's weird if they don't. And Joe was like, wait, you build a rocket expecting it to explode? And he goes, yeah, you expect it to explode until it doesn't. That's how it works when you're building stuff for the first time. And I was like, damn, that's a good way to look at it. So that's why I was joking around about him running out with a rocket launcher and like shooting it and blowing it up. And then like my buddy's like, actually, it did blow up. What are you talking about? And I'm like, wait, what? And it was just funny. SpaceX cut off before it actually exploded. Yeah, it's going to be crazy. I mean, if we're entering a commodity bull cycle right now, like these commodities are going to rocket ship to new all-time highs, and most of them are at like a fraction of their previous all-time highs, or at barely just entering bull trends. So even if they just 10x, I mean, the beauty of a commodity over, a speculative asset is sugar and coffee can only go down so much. Uranium can only get so cheap. Silver can only go so cheap. And once it does, if it goes too cheap, people just won't sell it. So you can say, oh, silver's $1 now. Well, who's going to sell you silver for $1? Nobody. So there's very little downside risk to something that has an actual purpose, unless like they build a machine that like turns dirt into silver or dirt into gold or dirt into uranium. Like if you invest in these things when they're already cheap, even if they get cheaper, there's very little risk. So they're, you can't beat them. What's up, New Pathway? Yeah, it's crazy, man. You know what I'm going to do, though, to wrap this video up, now that we're done with the TA? I'm going to wrap it up with a quick talk about... Oh, what should I talk about? Minimum wage? Wage gap? Touch base on those two things, because fundamentally they're flawed, and I never hear anybody talking about this. Okay. Minimum wage is the minimum amount an employer is allowed to pay you to work there. Otherwise, it's not fair. So if you set a minimum wage, what is the minimum wage? It's the distance between zero and employable. That's what it is. If you're not worth that minimum wage to a business owner, minimum wage is $10. If you can't generate $10 worth of profits or use or usefulness to that owner, they won't hire you because they would take a net loss. You come work for the company, you make the company $7 an hour, they pay you $10 an hour, they lose money. So when you raise the minimum wage, you raise the amount that somebody has to provide in value to a company for the company to hire them. So you increase the gap between unemployable and employable. So everybody says minimum wage should go, not everybody. People say minimum wage should go higher. Yeah, I'm going to post it for sure. Minimum wage should go higher, people say, because nobody affords, or nobody should live below poverty level or whatever. So you're going to kill jobs because people will literally go out and build robots or machines or eliminate positions because it's not worth their time to pay someone to do that job. So instead of having someone take your order at McDonald's, McDonald's will pay $5,000 for a machine up front and take a loss buying that machine to not have to pay someone $15 an hour for the next infinity years when people buy McDonald's. So increasing the minimum wage will literally destroy jobs. And right now, small businesses have taken a huge hit and the economy is crap. And now you're going to destroy a bunch of jobs too and make minimum wage higher so that the barrier to entry into the job market is harder. So part of the problem with the United States specifically is regulations and rules and laws create barriers of entry for small businesses to enter the market. Therefore, you can't just start selling lemonade on the side of the road. You have to go get a license. And then you have to get a license. And then you have to make sure that the health inspector comes and you can pass the health inspector checks. You're washing your cooler every night so there's not mold in it. Then maybe they want to check your kitchen where you made the lemonade at and make sure it's clean. And then, maybe they want to make sure that the cups you use don't have too much like wax or plastic or whatever in them to make sure you're not poisoning your guests. So all these things make it harder for someone to start a lemonade stand, the same way that the barrier to entries of regulation, or in this case, minimum wage, make it so that someone can't get a job. So if I want to get a job, but I'm only worth $10, but minimum wage is $15, no one hires me because I'm only generating $10 worth of usefulness. So what do? You make a minimum wage $15 and you open up the borders and let a bunch of illegal immigrants come in, and what happens? Those people get hired under the table for less than minimum wage. So for people that are following the laws, it's now harder to get a job. For people that want to make minimum wage or deserve to make minimum wage, or are U.S. citizens or whatever, so now people go outside the system. So now, even if you are an American citizen, maybe they pay you under the table. So now Uncle Sam doesn't get tax money. Now you're breaking the law as an employer. Now you're breaking the law as an employee. And now you're still getting less than minimum wage. Or that job now, because landscapers don't deserve $15 an hour, hypothetically, I'm not saying that they don't, because they actually work really hard. Let's say, or busboys at a restaurant, now they just hire someone under the table, or an illegal, or whoever's willing to work for less than minimum wage. So you've just created a whole new bunch of problems, a whole new bunch of regulations, but you don't benefit anybody. There's a very small amount of people that actually benefit from a $15 round of minimum wage, because it's the people that were worth $15, but we're only getting 7 or 10. But the majority of the people that are getting 7 or 10 are not worth 15. So the majority of people that are making minimum wage, those jobs go away. And then one dude now, instead of making $7 an hour, makes $15 an hour and works twice as hard. So that one guy keeps his job, but then for every one that keeps his job, 2 other people go away, or 1 other person goes away, or whatever. So it creates more problems. And now about the wage gap. All statistics aside, because there's a lot of statistics that say like men and women have a wage gap between them, that women make less money than men. Maybe at one point in time that was true. Maybe it's still true in certain areas. But I'm going to tell you a fundamental problem with saying that it's cheaper to hire a woman than a man, with everything even. As a business owner, if it's the same amount of money to hire a man and a woman to do a job, and they both do an equal job, everything even, do I want a man or do I want a woman, but there's a wage gap, so I get to pay the woman less to do the same job equally good? I would only have women work for me, ever. There would be no men employed anywhere. Every single business owner would only hire women because they were cheaper to hire for the same output. So there's something else that stops a woman being equal to a man to do that same job, or else only women would get every job. And then when they ran out of women, they would have to resort to hiring men. So there's a fundamental flaw with anyone saying that there is a wage gap, that women make less money to do the same job as men, or else every single position would be filled by a woman until we ran out of qualified women, and then we would settle for a man to hire him to do that job. So there's a fundamental problem with that whole idea. Do I believe that if you take all women, all their salaries, and then divide it by the total women, and then you take all men and all their salaries and divide it by the total amount of men, do I believe that you would get an average higher for men than women? Yes. Because equality, specifically in the United States, has only been going on for so many years. Women didn't even have the right to vote, and the possibility to further themselves, the glass ceiling, whatever you want to call it, has been in position for all of existence. We've still never had a woman president yet. There's still a lot of positions where we don't have women CEOs or women whatever. So yes, time is definitely a factor, but I think on a long enough time frame, eventually those numbers will even out, over time. But that's not a good way to calculate things, because if you say we have a system that was essentially like a patriarchy, and then eventually it goes to even or even a matriarchy, then over time, all things considered, I think they would even out. But you also have to take into account that men are physically, typically in general, larger, stronger, more willing to do like dirtier jobs and stuff like that. So you don't get as many women that are trash men. And maybe trash men make $30 an hour, and the equivalent to a trash man for a woman is a waitress or, whatever. So there's more waitresses than men, and maybe more garbage men or more, electricians or car mechanics, and maybe they pay slightly more or way more than your entry-level job for a woman. But it's not because nobody wants to hire women, because if they could hire them cheaper, they would just hire them. You know, but if you essentially don't have women that are interested in that position, of course there's going to be more male plumbers because women don't want to be a plumber, or more male garbage men because women don't want to be a garbage man, or whatever the situation is. So there's a lot of outside factors to when you try to average out like a huge number like that. But the absolute fact that trumps all of it is that in the end, if you can hire a woman, if the wage gap is real and you can pay a woman $1 or $2 or $5 or $10,000 a year less than you could pay a man to do the same job with no other differences, then you would only hire women, because there would be more money on your bottom line. So there's the minimum wage gap, or minimum wage, and the problem with that, and the male-woman wage gap. And if you disagree with me, I would absolutely love to hear your opinion on either one of those things. But fundamentally, from an economics and business point of view, both those arguments are extremely flawed, and I don't find any validity overall, you know, to either one of them. So, well, I think we're going to wrap it up there. Any other questions or anything in the comments? Appreciate everybody that showed up today. This was kind of impromptu. I was like toying around with it, and decided to go live today, just to kind of see how it would turn out, how it would look, and then I'll go back, check it out, make sure the sound looks good, quality looks good, and you know, hopefully over time it'll grow the channel a little more, and when we're seeing like volatility in the markets, I can jump in and like you guys can interact with me like in person in real time. So, well, there you have it, guys. Crypto trend trader with plenty long TA market update Sunday evening, and we'll see how this week goes. See if we start showing some strength and can break back to new all-time highs on some of these assets, or if these markets continue to get crushed. 1.9 trillion stimulus on the way. So for everybody getting a check, congratulations. I am happy for you. I'm glad that they are finally doing something to help people. I know it's probably too little too late for a lot of people. I wish they would spend our taxes in more useful ways, like giving money to people who need it, than wasting it on wars and tunnels in Silicon Valley and all this other trash. Their political salaries. But I'm at least glad that some of it is going to the people. For anybody out there struggling, hang on. We'll get through this. This too shall pass. And for everybody out there just crushing it, doing work on these markets, congratulations. Keep at it. Keep grinding. Don't get complacent. That's it for tonight, guys. Hope you enjoyed the live stream. Everybody stay safe. Crush these markets. Take them profits. Protect your principal. Crypto trend trader. And I'm out of here. Yep. See you next Sunday. Probably before then, honestly. I'm planning on doing these